Good morning, friends. Good morning, friends. Okay, so today we are going to start with kind of a revision discussion on one of the most important subject of your group 2. See, as such group 2 is concerned, it is a mix of theory paper as well as the practical paper. So, obviously to score your 150 marks in the aggregate, the practical paper helps a lot. So, in that one of the subject we have is cost accounting, which obviously carries 100 marks in your paper. I'll initially discuss little bit about the subject and then I go towards the various areas. As I get to know that all of you have gone for the classes till now, before I start with discussing the subject or the pattern, let me know what are the challenges you face in the subject. What is the difficult part of costing? The easier part I'll help you out with. What is the difficult part of costing according to you? MCQ. Okay. What else is the challenge? MCQ is one challenge. Time consuming paper. Okay, MCQ, time consuming. You'll have to tell me your challenges so that I accordingly plan it. MCQ, time consuming paper. Perfect. What else? Or what is so good, easy about costing, tough about costing, whatever it is? You will have to tell whatever it is. Unless you guys tell me, unless I understand from you, I cannot proceed ahead. Sometimes you get okay tricky questions. Okay, then are there any specific chapters where you struggle in costing so that I may focus because everything we can't do? So, any specific marginal costing? Okay. Any other chapter where you find standard costing? Okay. What else are the challenges? Labor chapter. Okay. So, whatever chapters you guys say, I'll try to cover them 100%. Well, 100% means I'll surely cover them. Some chapters I may not cover. So, that's why I want to know what are the tricky chapters for you. If you have any tricky chapters, you'll have to tell me. So, everything else is easy. Perfectly fine. No challenges in the other areas. Over it. Okay. Which chapter carries maximum marks in exam? Which one? Okay. Marginal costing carries maximum marks, but there was one very easy chapter which I'm going to start with, and that carries a lot of marks. I was also surprised to see that carrying so much marks, which is called activity based costing. The very simple chapter may not take me more than 20 minutes to discuss the whole chapter. So I'll do more problems, but that's a chapter with 20 minutes of time, we cover around 10-12 marks of exam paper. So quickly a historical analysis of the marks. So if you see here, the maximum obviously is marginal costing, which is 12 marks of your paper. But there is this chapter 5, which carries around 10 marks, which is your activity based costing chapter. A very tiny chapter, nothing much is there in the chapter, but still frequently tested in exam. And I think the major challenge for costing paper is completing the paper. The students have found it very, very difficult to complete the paper, and completion, multiple things can be done. One, you will do a lot of practice, but beyond a point, what happens is when you come to the exam time, when you see the question paper and you find something different, because you will not get exact copy paste of ICI question. See, what ICI has been doing is they are doing the right thing. They take question 1, question 2, question 3, mix them together and make it as one question in exam. It's not that they're asking a very different question or a very difficult question in exam. It is that they are mixing question 1, question 2 and question 3. In that process, the student loses that comfort or control on the paper. So that is where the bigger challenge is. As long as you are able to understand various adjustments and reproduce it in the exam, you will be in a position to manage it. I always tell for paper completion, there's no choice left. You will have to follow a rule called as 1.5 minutes per mark. That is the rule which I have been telling my students. I've been teaching for the last 10 years, and the rule is very simple: 1.5 minutes per mark. So if a question carries 10 mark in exam, you cannot spend more than 15 minutes on it. I'll give you a classic example which you'll be able to relate to in accountancy. You have an area called consolidation. What students do is they spend some 1 hour on that one question, and in the end, the question will carry 15 marks, 20 marks, 14 marks, 10 marks. But that 1 hour you cannot spend on one question because and on top of it, after spending so much time, also some mistakes here and there will happen, and you do not get the marks which you are requiring. So, first thing which you have to ensure is somehow I have to complete 100 marks of paper. That should always be there in the mindset of a student. What also happens many a times is ICI, though a lot of checks and balances are there, some question here and there they commit a mistake in the question itself. The question framing, there's a mistake. And what grace marking ICI follows is if a student has attended that question, give marks to that student. What you did, you left that question because you did not have time. So that also becomes a challenge. So understand how you can clear. See, if you're going to write only for 60 marks, expecting 50 out of 60 is very tough. Unless you try to complete your 100 marks of paper, it is going to become an extremely challenging. Unfortunately, one thing MCQ which is brought in is a good thing because it ensures good marks for people. But ICI, what they ended up doing is earlier there used to be 20 mark question. So 10 plus 10 was the mark. Now they made it as 14. Same question, 14 marks, they made it as 7 plus 7. So unfortunately, now you're indirectly answering for 130, 140 marks of a paper when I compare with the past. So earlier, people were answering 5 into 20. Now you're answering 5 into 14. Along with that, another 30 marks of MCQ, which is like some three separate problems. So indirectly, you're required to answer 8, 9 questions. So speed becomes very tricky, very important. Completing paper is extremely important. See, I'll go back to when I used to write my exams. I used to ensure that at least I complete my paper. There were tougher papers, there were easy papers, whatever it is. When I wrote my exam, accountancy was a very tough paper at that time, but the correction, the evaluation was very lenient by ICI. So many a times, if you see an easy paper in exam, you become excited. Don't get excited if you see an easy paper because correction will be very tough that time. So when correction is tough, you make small mistake, marks are gone. And when the paper is very tough, don't get disheartened. Even if you do half of answer, they'll give good marks in that question. So that's what ICI does. They try to balance both. Their activity is very simple. They are thinking that we want students to secure decent marks, but it's not that they want everyone to pass also. So they try to see that whether you are able to manage as compared to other students. Now the challenge also comes in this paper is in this group is because costing is very lengthy and you don't secure marks in this paper, your aggregate becomes a question mark. Your aggregate will become a question mark if you don't score around 60 in costing. So costing is not a paper for 40 marks or 50 marks. People may think that I'll score my 40s or 50s. People have scored marks in auditing. I'm not saying people can't score, but if you look at historically, the average score in auditing would always be lower than the average score in any practical paper. So auditing, you are not able to secure marks. SM becomes difficult, and FM, though it's a practical paper, but I've been seeing ICA asking a little tougher paper. I teach FM as well as costing, so ICA teaching are keeping a little tougher paper. So that is why this subject is very critical for you to secure your marks. What we will do is we're going to start today with activity based costing. After that, I'll go to another chapter. I'll tell you what we are going to do is first thing, I'll discuss a little bit on the MCQ part. Now, many of you have created a mindset that MCQ is tougher. That's a mindset which students have created, and I'm not saying yes, no for it. But let me show you a few things so that you get the comfort that MCQ is not different. Okay, this is an MCQ asked by ICI. This came as a 10 mark MCQ in exam. Let's assume this is a mock test paper question. Now, earlier, except for this question 1, 2, 3, 4, 5, everything was coming in exam as a descriptive question. So people think that MCQ means you need a separate preparation. What ICI was asking, the same question, first question, calculate the contribution margin per unit. You were not given four choices. Second question, determine the break-even point. Marginal costing, you would have seen question, determine the break-even point. Question number 3, wants to achieve a target profit. What will be the sales volume in units? All these questions were coming in exam, will continue to come in exam. Are these different questions? No, these are what you were normally reading also. It is not that you are doing this differently. So that is where one challenge has now come. Don't ever think that MCQ is different. If you are having that thinking that MCQ needs a separate preparation, then you're making a big mistake. MCQ is not separate. MCQ is exactly what? Same as your descriptive question. Because good, someone told that MCQ is becoming a challenge. Only thing is, ICI sometimes makes the question more challenging, but that also I've seen only in mock test. In the exam paper, I heard the paper was easy. The mock test, the MTP, the MCQ question was not that tough. So again, repeating, MCQ doesn't need separate preparation. If you are thinking that you have to prepare separately for MCQ, there's nothing like that. I cannot prepare separately. You also cannot prepare separately for MCQ. Have that confidence that same questions, this is a 2 mark MCQ. Now, this would have come as a 2 mark descriptive question to you. In MCQ, what they've additionally done, they've given you four choices. Now, what is the use of MCQ, or what is the best part about MCQ is because there are four choices, some question I'll be taking assumption in my answer. My assumption is different. I say assumption is different. My answer does not match. They were giving marks. They were not giving marks. Same question you give me in a cost sheet. I have classification difference, and I'll give a different answer. You will give a different answer. You give a different answer. I say it doesn't award me marks. MCQ, that challenge is taken off. MCQ ensures that your 30 marks is not at the mercy of ICI. It's not at the mercy of ICI. And internationally, all the courses, mostly they have MCQ based testing only, like courses like CFA or CPA. Why MCQ is the best way to test your concept clarity. So I have created something called as a concept book, which has a lot of MCQs, which I'm not going to do it now. You will be doing for your practice, but when you do that for your practice, you will get that comfort of the concept. How to get clarity on the concept will come. What we are going to do in the sessions are, I'll first discuss briefly the concept. I'll try to cover concept in depth. Problems I may cover less, I may cover more, but my focus would be on getting the clarity on the concept. I have a question bank which is of 400, 420 questions that is also shared to you. If you want, you practice that. If you don't want, don't practice it, because depends on how much time you have. So how are we going to prepare is, I have totally shared four materials in your group. One is a theory material, one is a concept book, which is what I'm going to extensively discuss, and there's a revision material. In the revision material, I have chosen 130 questions out of those 400 questions, because we have more number of questions, becomes difficult to manage. See, when you do your first round of preparation, I normally cover in my classes, out of that 400 questions, 300 questions I cover in the class, and the classes go on for maybe 120, 130 hours. Here, we are going to discuss only around 30 hours of classes, so obviously we cannot cover all the questions. But I have chosen some important questions from that question bank only. So I have given the reference of the question bank number, and this is a separate material which I have created. So we will focus on this. Additionally, you have two choices: either cover ICI study material questions, or cover the entire question bank. Entire question bank may become challenge for some of you depending on the time available. So your ICI study material questions are also decent enough. If the paper is very tough, whether you cover my question bank, if you cover my question bank extensively with all clarity, then maybe a very extremely tough paper also you can manage it. But otherwise, a normal kind of a paper, ICI SM, and these 120, in this 130 questions also will predominantly be from your SM only. A lot of questions will be from your study material. Some would be your MTP questions and RTP questions which are there. Everything is from MTP, RTP, suggested answers, ICI study material. Nothing is away from it. I've not tried keeping my own questions. Some here and there I have kept it. So if you cover those 400 questions which are there, then I don't think anything else is there in costing. But all depends on how much time you can give to the paper, and how much, because some of you could be writing two groups, some of you could be writing single group. So accordingly, we'll plan it. So I'll be starting now with the first area, which is your activity based costing, where we'll first initially focus fully on the concept. Once the clarity is there on concept, we'll practice few questions. I have around four questions only selected. I may practice all the four, or I may do three out of four or two out of four, depending on the time. But focus will be more on the concept. Focus is on the concept. So now, coming to activity based costing, I don't require you to write anything unless there is a need. I'll mostly you need not write anything. Okay, coming to this paper, this chapter. Now there is two ways of doing costing. One is called traditional method of costing. Second is called activity based costing method. In your traditional method of costing, which you could have learned, what we do is we calculate the material cost, we calculate the labor cost, and overheads I have to absorb. Now, for example, I am running a retail store. When I run a retail store, you go and buy any product, they know what is the purchase price, the fixed selling price, but they also incur salary cost, electricity cost. All these are called overhead cost, which I cannot directly trace. For example, I'm taking this class. When I take this class, there is a cost for the faculty, but there are other costs which we incur. I'm going to incur the electricity cost. I'm going to incur the technology related costs. So all these costs, how do I recover from my students? Because at the end, everything has to be recovered. Any businessman, whatever expenses he incurs, he has to recover it from his customers. If I'm not able to recover that, then I'll be having a loss. So if any company is making a profit, it means he has recovered every cost from his customer. So in the end, I have to recover the cost from you. Now, when I'm trying to recover this cost from you, I have two ways of doing accounting. One is called traditional method. What do we do under traditional method? Under traditional method of costing, I calculate overheads department wise. There I call it as production department and service department. You guys can participate. This is your traditional method, which you, and from your service department you transfer it to your production department. Use something called as what? Overhead absorption rate, or a overhead recovery rate, and recover it from the end customer. In case you want to make running notes, make it, but otherwise everything is there in the material. Focus on understanding things. Wherever I tell you to write something, you write it, but otherwise please focus on mostly understanding things, rather than, because many a time student focus keep on writing things, you lose the focus on understanding things. And we'll try to give it in the recorded form also later on. If you want, you just see it again also, so that you don't miss out on anything. So because focus, as of now, I want you to be have, when this class ends, if I ask you what are the steps in ABC, what are the steps in traditional method, everything should be very clear. Now ABC is an advanced method of costing. Now, why did this come into picture? See, 20 years back or 30 years back, customer was more or less at the mercy of the seller. For example, I want to buy a mobile phone. When I purchased my first mobile phone, that was in 2007 or something, I just went to a store. The shopkeeper told me, please buy this. He told me, buy this. I bought the phone, because that time awareness was not much. Today, before buying a mobile phone, you check first reviews, you check multiple websites for the price. Wherever price is lowest, you try to buy it from there. So businessman is not having that much potential for profit at this stage, because now who is the most important person is the customer. So it is more, seller is not having the power, buyer is having a lot of bargaining power. Because buyer has bargaining power, every businessman has to work efficiently. If you just stop working efficiently and keep wasting cost, you cannot recover that from the customer. I cannot tell you guys saying that our classes is 1 lakh rupee, because our cost is so much, you pay us 1 lakh rupee. Because earlier what used to happen, cost plus profit is equal to selling price. Now all that cannot work, because no student is going to pay for 1 lakh rupee, because they know what is there in the market, what are the market trends, and accordingly I'll have to fix my prices. So because of that, I have to become efficient. ABC is a method. ABC is a method to know where I am wasting, if at all, is there any wastage of cost. I try to identify those cost wastage and ensure that I recover it in a smooth manner from my customer. So under activity based costing, similar to the traditional method of costing, but what we do here is first is you classify cost to various activities. Classify the cost to various activities. For example, if you go to a bank has multiple activity. First activity is depositing cash. Second activity is depositing check. Third activity is withdrawing cash. Fourth activity is printing of bank statement. Fifth activity is allowing an ATM transaction. Every activity involves a cost. Every activity involves a cost. If you go to the bank and tell that I want to withdraw more than three times in ATM or more than five times in ATM, there is a charge which is levied on you. The reason is they also bear cost. How did they get to know how much cost they are bearing? Through activity based costing. In fact, in your ICA study material, there's one question on a bank where they are trying to find out what is the cost for every activity. So, like that, if I want to issue a demand draft, 2 3 DD they give me free of cost. After that, they say there is a charge. Checkbook, initial one check leaves, they may give me free of cost, but later on they ask money. Printing of bank statement. So every activity at some stage they start charging. How do I get to know all this? I get to know all this because I am doing costing of the customer. And where do I get this knowledge? Through activity based costing. So first cost is electricity cost. Now this electricity cost needs to be distributed over these five activities which I said. What are the activities? Like your printing of bank statement, withdrawing cash, depositing cash. So whatever activities you decide, please distribute that to the various activity. After you distribute the cost, every activity will have something called as a driver of a cost. For example, my withdrawal cost depends on how many withdrawals are happening in the bank. If more number of withdrawals happen in a bank, I may need two cashier, three cashier, four cashier, five cashier. If there is a continuous inflow of customer, I need to increase the number of people because I cannot keep making my customers wait also. Because earlier, if you made customers wait, people were okay. Now, if you keep making customers wait for some 30 minutes, they'll change the bank. They'll change the bank. So it's not so easy. See, earlier, I am the seller, I am the king, I'll do whatever I want to do. You cannot ask me anything. So understand why did this ABC come into picture first. ABC came into picture because you are now the king and the seller, for example, when we are taking classes also, we'll have to see what our students need. Without knowing students need, I cannot just randomly keep doing things and say that okay, let's do this batch, students will come, let's do this, let's do that. No, it doesn't work that way. You will have to exactly understand what is the need of the students. Without understanding the need of the students, you cannot keep randomly doing things. So first I classify cost to the various activity. For every activity there will be a driver. This is what ABC is all about. So ABC assigns overhead cost to various activity, and the activity costs are absorbed to the end product using something called as a cost driver rate, using something called as a cost driver rate. Now what is this cost driver rate is? It is similar to something called as overhead absorption rate or overhead recovery overhead recovery rate. How are we calculating in the earlier method? This is how you are doing budgeted overheads. What is budgeted overheads is whatever departments you decided, what is the overhead cost. There used to be a base. What is the base? Direct labor hours, machine hours, some basis you are using to recover the overhead cost. I'll discuss that in detail when I go to the overheads chapter. Why I've started with ABCs? Because it carries more marks. Ideal rule is to do material, labor, overheads, and then do ABC. But why I'm not following that? Because you already seen the subject once. So it's not very difficult for you to grasp these concept. So I have a suitable base which is going to be there. Using that, I was recovering the cost under the traditional method. Under the traditional method, we'll see it in a problem. Then, using this, you are calculating cost per unit. Using this, you are calculating the cost per unit. What is the cost per unit? Will have material cost, labor cost, and overhead cost. Now, when you come to ABC, this remains same. This remains same. Only thing which changes is this. And for this, ICA will award you 10 marks in exam. They'll ask a 10-mark question where material cost remains same, labor cost remains same. The challenge is with what? the overhead cost, which you'll have to separately calculate. How do I calculate that? Using this. First, I calculate cost driver rate. I calculate something called as a cost driver rate. What is cost driver rate? Is rate for every activity. What are the normal activity? When you look at ICA question, inspection, material handling, dispatches, production, setting up of production, all these are normal activity. So for example, first activity, I'll just give a name. Inspection is an activity. What is the cost of the activity? The question may give you, or you may have to calculate it. Let's take an example, 10 lakh. Cost driver name. For inspection, my cost driver is number of inspections. Number of inspections is my cost driver. How many inspections have happened in the company? 50,000 inspection. Cost driver rate is 10 lakh divided by 50,000. Cost driver rate is 10 lakh divided by 50,000. Like this, you'll have to do it for every activity which is there. Once you do that, use this rate from here and multiply with the quantity of that product. That is, in that 50,000 inspection, product A 10,000 inspection was done, product B 40,000 inspection was done. So 10,000 into the CD rate, 40,000 into the CD rate is the overhead cost of product A, product B, and that gives me same material cost, same labor cost, overhead cost is different. Same material cost, same labor cost, and overhead cost is different. Now, the best part of my material is this. I'm not going to do any of this, but later at home, once you understood the chapter, you're going to practice these multiple choice questions. Now, the purpose of these MCQ is not to help you in that ICI MCQ. This is going to help you even in your descriptive question. It's going to help you even in your descriptive question. Now, if you see this example, this would have been picked from some other bigger question, and the important adjustment. See, if somebody tells me that activity based costing ICA has 10 question, no, there are only one question, and 9 question has something add on here and there, some extra addition in every question. That one question we will do, extra add-ons are these MCQs. The extra add-ons in every question is this MCQ. The answers to this is there. If you need any explanation, I've already uploaded that in my YouTube channel. Why I'm not doing it now? Because unless you understand the base concept fully, doing this MCQs will be difficult. In my regular classes, I complete the subject fully, and that is complete the chapter fully and then do these MCQ. So students are able to participate well. At your stage, initially, if I do the MCQs, you may not do it properly along with me because we are yet to cover the concept fully. So first thing what we will do is we'll practice 2-3 questions. After they are practiced, take out any MCQ, try solving. Don't, if you don't get an answer, nothing to worry about it, because reason is very simple. This MCQ is going to cover those 400 questions which I've done in my bigger book. I have picked only 120 questions for you. So as you do these small questions adjustments, you learn, you'll be able to tackle any type of question in exam, and this will also improve your speed. The speed part will get improved if you're able to tackle these MCQs. I have uploaded in my YouTube channel the entire MCQs, around I think some 250 300 MCQs are there, which I've covered in some 10 hours. In 10 hours, the entire MCQs will get covered. I'll discuss the question, wait for 10 seconds for the student, and then I discuss the answer. So when you want to see those answers, you look at those videos, pause, look at the question, solve on your own. Not getting the answer, play, you will get an explanation, you will understand it. Clear? Any doubts on this? So that's all. This chapter is over if you understand these 5 steps properly. If you understand these 5 steps properly, in that also, step 1, step 2, ICI may ask and few questions may not ask, because sometimes they'll ask traditional ABC comparison. Sometimes only ABC, only traditional will not come. So traditional is step 1 and step 2. ABC is step 3, step 4, and step 5. If you are able to do this properly, this chapter is over. The chapter gets over moment, and whatever questions I'm going to do, I'll not go beyond these 5 steps. You can see the questions which I'm going to do. Exactly 5 steps I'm going to do, nothing beyond these 5 steps. I'll repeat it. Step 1, overhead absorption rate under traditional method, chapter 4. It is chapter 4, not chapter 5. Using that overhead absorption rate, you'll have to calculate cost per unit under the traditional method. Once the cost per unit is calculated, you will have to copy paste this. You will have to copy paste this again. You will have to copy paste this again. See, you could have learnt it little differently. Don't worry about it. It's not exactly same steps you have to follow. Don't worry about following same steps. Whichever way you have learned, it is perfectly fine. Crux is going to remain the same. No faculty can teach any differently. The crux has to remain same. It's not that I'm going to teach you differently or somebody else is going to. ICI material, sometimes they will do 3 and 4 steps together. Sometimes they'll do it separately. So all that can happen. But the concept has to remain same. So first two is traditional method. Next three step is what? ABC method, where you'll have to calculate cost driver rate. After the cost driver rate is computed, you'll have to absorb the overhead or apportion the overhead and again repeat step two. Again repeat step two. Clear? Any doubts on this? Any doubts on the 5 steps? Now, these are some of the active, not some, every question, whatever activity is there, I've copy pasted that here from your ICA material. And what is the driver we have been using, because without knowing the driver of the activity, you'll not be able to solve the question. So machining is related to running of machine. Machining is related. So we have a driver called machine hours. Driver is basically something which causes a cost to take place. Electricity cost here. There are two drivers here. One, number of hours I'm going to take the classes. Second, number of light points, the area which is there. If it's a bigger area, you will have more electricity cost. Smaller area, lesser electricity cost. So the cost depends on an appropriate driver. The cost is going to depend on what? Something called as an appropriate driver, and the driver can keep changing. The driver can keep changing. Setting up, what is setting up? Starting a machine, for which we have a driver called number of production runs. Store, receiving, inspection. Quickly see this. Any driver you have a doubt, let me know. Anywhere you have a doubt, you'll have to tell me. Quickly see this. Anywhere there is a doubt. These are the normal drivers we are going to use. Driver is very simple. As you see, you'll understand it. And anyway, because it's not new cost, not new for you, you could have seen all these names earlier also. This is what ABC is all about, nothing beyond this. Whatever I'm going to do beyond this is just for practice, because I have to give you that practice. I'm going to do question, but technically chapter is over. Technically the chapter of activity based costing is over. 10 marks over. I've spent 30 minutes. In that 30 minutes also, initial 10-12 minutes I spent for explaining the subject and all. As I said, this is only a 20 minutes chapter. This is nothing beyond this, provided you are very clear on all the 5 steps. Clear? Any doubts on this? ABC is a more accurate method of costing as compared to the traditional method of costing. Now I'll be doing few questions for you so that you get the comfort to face the exam. Once the questions are done in the study hours batch, what you're going to do is later on when you get time, you will practice your ICI SM. Are these 130 questions? Are the 400 questions question bank? Even when you practice ICI SM question, if you're not able to understand ICI solution, look at the answer in my question bank, because the same question only I would have kept there, but I would have solved it in a little simpler manner. The manner in which I would have solved would be little simpler than ICI solving. That is the only difference. Let's now move to questions. I'm coming to activity based costing. I'll be doing question one. I'll read out the question and then let's do it. ABC Limited is a multi-product company manufacturing three products A, B, and C. Budgeted cost and production for the year ending 31st March 2018 is as follows. Production quantity, direct material per unit they have given 4, 6, and 3. Will multiply with rate per kg. Direct material is over. Direct labor 30 minutes, 45 minutes, and 60 minutes will multiply with rate per hour. Labor cost is over. Labor cost is over. Material cost over. Labor cost over. Where does the major time goes? Major time will go in what? Overhead cost. Budgeted direct labor rate was 10 per hour. Budgeted material cost is 2. Production overheads 2 per kg. Production overheads were budgeted at what? 99,450 and absorbed to product using what? This is the traditional method. Under traditional method, I said you can have direct labor hours or machine hours method, or it can be anything else also. So direct labor hour method. Now, how do I calculate direct labor hours? You have to, when you read the question, be very clear. How many units are there? 4,000, 3,000, 1,600. 4,000 units into 30 minutes, 3,000 units into 45 minutes, 1,600 into 60 minutes, whole divide by 60 to convert into number of hours. Whole divide by 60 to finally convert into number of hours. This will give me the number of labor hours. How will I get the overhead absorption rate? 99,450 divided by the number of hours which we just calculated. We are going to do all this calculation as we proceed, but understand the question properly. Then ABC Limited followed an absorption costing system. What is absorption costing system? Is your traditional method. That is your traditional method. Is now considering to adopt what? Activity based costing. Budgeted overheads were analyzed into the following. Can you please tell me the total of these three? Quickly put a total. 99,450. So it's not that this is a different method. It is basically the same 99,450. We are now bifurcated into three different costs. What we are going to do is, earlier you told me for 99,450 one rate, one overhead absorption rate. Now no, give me a separate rate for material handling. Give me a separate rate for storage cost. Give me a separate rate for electricity. And how will I get the rate? Using a driver. This question has given the driver. If they don't give me the driver, then I gave you that in the last part saying the third concept where the activity and the driver names were there. You will look at the data in the question, think logically a driver. Material handling, weight of material handled. What is weight of material handled? 4,000 into 4 kg, 3,000 into 6 kg, 1,600 into 3 kg, provided no extra cost is there on the, or no extra weight is added. This could be the weight, or the question may give you data here. The question may give you data on the weight of material handled. Second, storage cost is what? Number of batches. For complete production, batches. For complete production, batches are given. What is batches? 10 batches, 5 batches, and 15 batches. I'll just add and close it. Then electricity, number of machine operations. This is number of machine operations. There's an error here. So 6 operations, 3 operations, and 2 operations for what? Per unit of production. For per unit of production. So take the units, multiply with this. This will do. Once this is completed, everything is over. What is the question one? Statement showing the unit cost using absorption costing method. Step 1, step 2. Statement showing cost under ABC, step 3, step 4, and step 5. What are the reasons for different cost? The reasons is very simple. ABC is something which distributes a cost based on activity wise, whereas under the traditional method I club all the overheads and do it under a single driver. Here we have multiple driver. Let's start solving this now. Working note 1. Let's start. You'll have to solve along with me, please. Working note 1. Computation of overhead absorption rate under traditional method. Overhead absorption rate under traditional method. One full question you will solve along with me. Later question I'll tell you what we will do. OAR under traditional method. Particulars, calculation, amount. Okay. I normally try to follow a single pattern for every question. If you have learned it differently, your wish, see, there's nothing like this is the approach you have to follow. Whichever approach you are comfortable, follow that. Right. Budgeted overheads, suitable base, budgeted suitable base, OAR. Budgeted overage, suitable base, budgeted suitable base, and OAR. Now coming to the budgeted overage. If you look at the question, the budgeted overage is 99,450. So write that 99,450. Suitable base can be machine hours, labor hours. What is the base we are using in this question? Direct labor hours, DLH. What is budgeted suitable basis? How many labor hours are there? How will I calculate? 4,000 into 30 plus 3,000 into 45 plus 1,600 into 60. Now in costing, many a times lot of calculations are done. I would always suggest you to have a calculation column in between for every type of a question you do if space permits, so that you can do the calculation here. 4,000 into 30 plus 3,000 into 45 plus 1,600 into 60 whole divided by 60. How many hours? 5,850 hours. And OAR is, this is point number A, this is point number B, divide them A by B. OAR is overheads divided by the suitable base. You get 17 as the answer. Okay. Ideally, when you present, you should not write 17. You should write this as rupees 17 per DLH. When somebody asks what is OAR, you will have to tell 17 per direct labor hour, because there is a recovery basis. So it can be 18 per machine hour, 20 per unit of production, 10 per kg of raw material. So it is 17 per DLH, 17 per direct labor hour. Clear? Now, when I was initially explaining, I said material cost is very simple, 4 into something, 6 into something, 3 into something. Labor cost is very simple, 30 minutes into something, 45 minutes. Overheads is also very simple, 17 into 30 minutes, 45 into 30 minutes, 60 into 30 minutes. That rate is what we calculated now. That rate is what we calculated now by adding all the overheads. Understand that overhead absorption rate means I'm recovering all cost from students. I'm recovering everything from you. I'm not going to see, every business has to make profit at the end. So every cost has to be recovered, and that is what the business is trying to do. Next, working note 2, computation of unit cost and total cost under absorption costing method. Particulars in 3 products. Particulars product A, B, and C. Particulars in 3 products. Direct material. Direct material. See, some question they'll give data for all units together. So you will do data for all units, finally divide by the number of units and get cost per unit. In this question, resources per unit is given. I'll do calculation for single unit and then multiply with 4,000, 3,000, and 1,600. So direct material is 4 into 2 rupees, 6 into 2 rupees, 3 into 2 rupees. 463 into 2 per kg. 463 into 2 rupees per kg. Clear? Direct labor is 10 per hour. Direct labor is 10 per hour. It is 30 minutes, 0.5 hours 0.75 hours and 1 hour. Zero point 0.5, 0.75 and 1 hour. The number of hours is this way. So next direct labor 10 into 30 by 60 technically. 10 into 30 by 60. 10 into 45 by 60 and 10 into 60 by 60. This is 2 into number of kg, 10 into minutes divided by 60. 10 into minutes divided by 60. Similarly, overhead. Overhead, what is the recovery rate we have decided? 17 into minutes by 60. 17 into minutes divided by 60. 30 by 60. 45 by 60. Clear? Any doubts on this? So I have my direct material cost, direct labor cost, overhead cost. All put together, I get cost per unit, number of units, and total cost. This is cost per unit. Add up everything. I'll multiply with number of units and get the total cost. This is what we are doing under the traditional method. Till this, 4 marks of the question. If it's a 10-mark question, till this maybe 3 to 4 marks of the paper. The number of units were 4,000, 3,000, 1,600, and I multiply. See, every concept, only one question I'll be doing in detail. So anywhere there is a doubt, you will have to tell me. I normally go very fast in revision. I'm going slow. So because you are already knowing the subject, so for you this is technically slow, but still, if there's a doubt, you will have to tell me. Clear? Any doubts on this? This takes care of my traditional method of costing. Now I'll be moving to ABC method of costing. Listen, what does ABC say is, I've written this 5 columns here, no, 5 rows. Listen here. I make it the row as column. I make the rows as column. First is called particulars. Second is called cost. Third is called suitable base is called CD name, cost driver name. Budgeted suitable base is called CD quantity. And when you divide it is called CDR. When you divide it is called CDR, cost driver rate. It's not different. Say same, I could have done it in the same format. This format itself I can do particulars, activity 1, activity 2, activity 3, activity 4, activity 5, activity 6. You can keep adding any number of activity, and for every activity you will have to write this. So it's the same thing. We do column wise. Somebody says no, I want to do it row wise. Go ahead and do. Nothing really matters. So now write activity working note 3, computation of cost driver rate under ABC. Particulars, cost, CD name, CD quantity, and CD rate. Along with this, working note 4, we'll have to do them together. There's a reason for doing together, you'll understand. Working note 4, apportionment of overheads under ABC. Apportionment of overheads under ABC. If you do these 2 steps together, scope for making mistakes is very, very limited. You will not make mistakes. You will get almost the right answer. Apportionment of overheads under ABC. How many products are there? Three. I need one particular column. Every product will need two sub columns. So if you have three products, totally seven columns. If you have four products, totally nine columns. Maximum four products, ICA may ask. Particulars and six more columns. Particulars, product A with two sub columns. CDQ and amount. Product A, CDQ, amount. Product B, CDQ, amount. Product C, CDQ and amount. Particulars A, B, C, CDQ and amount. Okay. What is the first activity given in the question? Material, handling, storage cost and electricity. Please write those names. Material handling, storage, electricity. Step 3 as well as step 4. Material handling, storage, electricity, material handling, storage, electricity. See, later on, you can do step 3 first and then do step 4 later. That's your wish. I normally teach it together. As you do questions, it all depends on your comfort. Okay. The cost of material handling is right 29,100, 31,200, 39,150. Sometimes this cost itself will not be given directly. You will have to do a calculation for that. That came in September 24 exam. They did not give the cost fully. You had to do a calculation for that. That question, a similar question is there in my question bank. So you can see it later, but sometimes you may have to calculate that cost itself. And the MCQ around that is there in the concept book. Now, cost driver for this is weight of material handled, weight of material, number of batches, number of machine operations. Weight of material, number of batches and number of machine operations. Now what I will do is I'll write first the CDQ here for A, B and C. Total is the CDQ of the company. Total is the CDQ of the company. For example, material handling, weight of material handled. Weight of material handled. How will I get the weight of material handled? 4,000 units into 4, 3,000 units into 6, 1,600 units into 3. So let's write that 4,000 into 4 is 16,000. Product is 16,000. Product B 3,000 into 6 18,000. And last product 4,800. A, B and C separately we have written the weight of metal handle. Tell me the total of these three weights. 38,000. That will come here. 38,800. That's why I do it. Say, 3 and 4 reason for doing it together is I can add it up here. Else for doing this 38,800 you will write a note below, which I don't want to do. I'll directly copy paste from here. I'll directly copy paste. I don't want to write a separate working note for this and then spend time on that. Storage, number of batches given directly. What is the product a batches given? 10, 5, 15. Write it for A, B and C. Total together will come in the top. 10, 5 and 15. Total is 30. Electricity is based on number of machine operation. Per unit of production, 6 operations are done. So 6 into number of units, 3 into number of units, 2 into number of units, put a total, take it in the top. So 6 into how many units are there? 4,000. So 6 into 4,000, 24,000. Then 3 into 3,000, 9,000, and 2 into 1,600, 3,200. Total of this will go to the top. 36, 200. I will now divide and write the CDR. I'll keep 4 decimals. If it comes in decimal, I'll keep it as 4 decimal. This is to reduce the rounding of differences. It's just to reduce the rounding of differences. I say it as 2 decimal also. Any doubts? Any number there is a clarity missing, please tell me now itself. So I divide this cost by CD quantity. 0.75, 1040, 1.0815. Clear? Any doubts on the three numbers which are there? 0.75. It is not 0.75. It is basically 0.75 per kg of material used. 1040 per batch of production. 1.0815 per machine operation. I'm not changing it there, but that's how technically you'll have to. If somebody asks what is CDR of storage, it's not 1040. You should say 1040 per batch. 1040 per batch. In the calculator, type 0.75. In the calculator, put 0.75 into 16,000 equal to, don't press any other key, okay? What's the number? 12,000. Listen, I'll repeat again. 0.75 into 16,000 equal to, then 18,000 equal to, 4,800 equal to. This will work in most of the calculator brand. Some calculator this does not work. Please change it. Whichever brand it works, please keep that, because in FM also this adjustment is needed. So 0.75, I have a common number which I have to multiply. I have to multiply 0.75 with three numbers. So what we do in calculators, first type 0.75 into 16,000 equal to, write the number. 18,000 equal to, write the number. 4,800 equal to, write the number. It will work in most of the brands. Some brands it does not work. Please change it so that you save some time, because time is very critical. As you said, it's a very lengthy paper. Otherwise, what students will do, 0.75 into 16,000 equal to, again start from the beginning, 0.75 into 18,000. You may not, maybe you save some 20 seconds, but that is also important. So 0.75 into 16,000, then 0.75 into 18,000 and 4,800. Clear? Now again in the calculator, 1040 into 10 equal to 5 equal to 15 equal to, 1040 into 10 equal to 5 equal to 15 equal to. If it's not working in your brand of calculator, my suggestion is please change it, because in FM also this adjustment is needed. And when I go to primary overhead distribution, there also I need this. So 1040 into this. Then 1.0815 into 24,000, 9,000 and 3,200. Clear? Put a total overhead cost. Product A total, B total and C total. The only difficult part according to me is the time consuming element. Otherwise, it's a sure shot scoring area. Clear? Can you proceed? Now, look at this. This is just for your understanding. If I put a total of these three, I get 99,451, whereas the overhead cost was 99,450. So we are not doing anything different here. We're just trying to absorb this to the three products in a smooth manner. That's all. This is what we have done. The overhead cost is not going to change. Nothing is going to change. The overhead cost is 99,450, but ABC can help in cost reduction. How it can help is next year when I'm trying to do my planning, I get to know that every batch we incur 1040 rupees. Can I reduce the number of batches? If I reduce the number of batches, next year cost can go down. Next year cost can go down if I reduce the number of batches. So next year it can help. This year nothing will do. Next year improvements can happen. Clear? Any doubts on this? The number of units and overhead cost per unit. Number of units, OH cost per unit. 4,000, 3,000 and 1,600. I've kept it as two decimal. You can increase the number of decimal also and make it four also. That's okay. Overhead cost per unit. More decimals, rounding of gap will not be there. Less decimal, rounding of gap will be there. That's the only challenge. Any doubts on the overhead cost per unit? Clear? Very crystal clear, simple. Now let's copy paste step 2 and call it as computation of unit cost and total cost under ABC, under activity based costing. Same thing, same format. Write it, please. Particulars: product A, product B, product C, direct material, direct labor, overhead cost per unit, total number of units, total cost. For one question, I want you to do it fully. Okay. See, this is, listen for a minute and then you complete it. This was my earlier method. Now, only thing we're going to change is this is 12.09, this is 9.48, this is 14.16. Wait for a minute. Total cost, three products, 2 lakh 35, and here it is 2,35,550. That's 6 rupees, a rounding of difference. So the overall cost is going to remain same. Nothing is going to change. Product A, there it was only 21 rupees. The real cost is 25. What you were doing is earlier you were selling product A for 25 rupees because you thought cost is 21.5. You were thinking you are making profit. In reality, you are making a loss. In reality, you are making a loss. Product B, you were fixing 40 rupees as the price. No customer is buying it because you thought cost is 32. In reality, the cost is only 29. In reality, the cost is 29. Product C, you are again overpricing it. So some product may get overpriced, some product may get underpriced. We don't want both. We don't want both. We want it to be correctly priced. That accurate pricing ABC can do. Because if I overprice, customer will not come. If I underprice, customer will come, but I don't make money. So in the end, the company is not going to make any money if you overprice or underprice it. Complete this now. These 5 steps you remember, any problem on ABC, you can tackle it. Clear? Can we proceed? I have 3 more questions, which I think I'll try to do all the three, but you're not going to do anything now. Your job is over. You'll be in listen mode only. You will ask me doubts then and there. That I'll clarify, but your job is almost over. What you will have to do is after the class, you'll have to practice all the questions. You'll have to do practice of all this 4 questions to 100% you have to do. Along with that, if you can pick few questions of your ICI SM or the bigger question bank, that ensures 10 marks is fully done. Nothing beyond this can come in exam. So be very clear. Let's now move to question 2. SMD manufactures 4 products, namely A, B, C, and D, using the same production and process facility. The company has been following conventional method of costing and wishes to shift to activity based costing. Product units produced, material per unit. They have not mentioned whether it is rupees or whether it is kgs. I don't know. We'll see later. Labor hours per unit, which is very clear. Machine hours per unit. Following activity volume are associated to the production process for the relevant period. A, B, C, and D. Number of inspection, number of material movement, number of setup. High probability these three are the main activity. The main activity can be inspection, which is number of inspection, material movement, so movement could be an activity, number of setup is production could be an activity. I assume these three will be the main activity. Direct labor cost 60 per hour, machine hour rate 280 per hour. Step 1 is already done for you. Step 1 is already done, but I'll be doing step 1 again. You will understand why as I proceed. Machine hour rate is what? 280 per hour. Production overheads are absorbed on machine hour basis. Anyway, that is already given. Machine hour rate 280 per hour. For ABC, cost related to setting up and inspection bears the equal percentage, while cost relating to machinery accounts for 20% of the production overhead. Cost related to material handling stands at 50% of cost related to machinery. Something they have given. We'll analyze this as we proceed. Last question, overhead cost was 99,000 rupees. The overhead cost was 99,000. We calculated the recovery rate, proceeded ahead. In this question, I have this. Okay, when it comes to ABC, they have given one setting up activity, second inspection, third machinery related cost, and fourth is material handling. You need to know all the 4 costs. You need to know all the 4 costs. For that, first I want to know what is that 99,000. What is that 99,000 of the previous question? So in this problem, I'm going to first to do this step. I'm going to do exactly this step. In this step, this will be the balancing figure. This is what ICI does. They ask one question in this pattern, second question in the reverse pattern. The second question goes in the reverse pattern. So I'm going to do, you're not going to do anything now. When I want you to do something, I'll tell you to do it along with me. Otherwise, be in listen mode, understand the concept very clearly. Now coming to this question, they've said what is the overhead absorption rate? 280 per hour, 280 per machine hour. So I write same format. I'm not even writing. I'm doing the same question one only, same format. I've not even made any changes in the format. Also, only thing I have to add one more column for fourth product, 280 per machine hour. Number of machine hours is units into 3 plus units into 2 plus units into 6 plus units into 4. Can you tell me the number of machine hours? Calculate quickly. 1500 into 3 into 2 into 6 into 4. Use memory function. How much? 93 500. This is machine hours, and this is 280 into 93 500. 280 into 93 500. Reverse working question. Exactly same question. Exactly same question, but it has come in the reverse manner. Done. This is part one working. So step one is technically not needed, but I know why it is needed because I have to calculate this. What will I do with this? I'll distribute those to those four activities which are there. Then comes my product A, B, C, and product D. Product A, B, C, and D. Same format: material, labor, overhead, cost per unit. I may do total cost if needed. Prepare a statement showing the unit cost and total cost. If they say showing the unit cost, don't do total cost. Don't do total cost. I stop at unit cost only. I'll not be doing it. So here both are asked. Material cost given in the question: 140, 90, 180, 150. So let's write 140, 90, 180, 150. Labor cost is 1 into 60, 3 into 60, 2 into 60, 1.5 into 60. Overhead cost 3 into 280, 3 into 280, 2 into 280, 6 into 280, 4 into 280. Problem is over as far as the part 1 is concerned, which is your traditional method. So this is 1 into 60, 3 into 60, 2 into 60, 1.5 into 60. Again, I'm telling you, in case clarity is missing, you let me know. Doubts are okay. Why I'm not telling you to write it now? Because if you write, your focus shifts to writing rather than understanding the concept. One question fully we are done. So there I wanted you to have that practice of the format and everything. In case I shift something differently, I'll tell you to write. Next, 3 into 280, 840. 2 into 280, 560, 6 into 280, 1680, 4 into 280, 1120. And this gives me cost per unit. I multiply with the number of units: 1500, 2500, 10,000, 6,000. Clear? This is traditional method. Now I have to shift to ABC method. I have to shift to ABC method. For shifting, I have to divide this for the four activities. 2 crore, 61 lakh, 80,000. I have to do some division. 261, 80. I have to segregate into four activities. So how will we segregate is what? Let's see. Cost related to setting up and inspection bears the equal percentage. Machinery is 20%. So in this machinery, 20%. Machinery is 20%. 2 crore 6180 lakh into 20% we will do. Machinery, the driver is machine hours. Machinery, the driver is machine hours, which is 20% of the cost. Then they said setup and inspection equal. I don't know what is that equal. Let me keep it for the right. Material handling is what? 50% of machinery. Machinery is 20. Material handling is half of that. Material handling is half of that. So material handling is how much? 10%. Balance 70, 35, 35. Balance 70%, 35 and 35. Clear? Any doubts on this? Now, whatever I've done here, later on at home, when you do revision, that's why I wanted to explain something and come back here. When you do this, you'll understand this. Cost related to machinery accounts for 20%. Material handling is 50% of the cost of the machinery. Inspection and bears the equal percentage. What is the setup cost? If you are able to solve this, this problem is over. This MCQ you complete, the problem gets over. That is how the concept book has been drafted. Cover the concept MCQs properly. The question which I am solving now, for me solving is going to take 6-7 minutes only. If you have to solve the entire question, At home, obviously, you will take 20 minutes minimum. To solve this MCQ, you will take only 2-3 minutes. With 2-3 minutes, the question is over. With 2-3 minutes, because the problem I'm doing now doesn't have anything else. It doesn't have any. The reverse working part which you saw, the reverse working part is coming here. The reverse working part is coming in this question. So every MCQ will test those special adjustments which are there. Your job is to focus extensively on the concept book and those 3-4 questions which I say. Even 4 questions you do, I'm confident. See, if the paper becomes extremely tough, I'm not saying that the 4 questions will help you in answering it. But if it's a moderate paper, not with very difficult, you will be easily able to score 60 plus in costing. That kind of an assurance I can give you, provided you complete the MCQ book fully. The MCQ book, the concept MCQ, you need to have clarity on every question there. Every question, because when you read this for the first time, no, you'll think, what is this question? I'm not able to understand anything. Let it be. I want you to go through that pain part. Okay, you're not able to understand anything. Then when you look at the solution, you get clarity on items. Once you get the clarity on the item, then you can handle those extra questions. So that is why I want you to practice questions also, because just the MCQ will not help, because just the MCQ means you don't know how to solve a full question. You will get stuck in exam. So concept MCQ along with this 4 questions of this chapter, like that I have picked questions that you handle first. Beyond that, extra things, ICI, SM, anything you can do. So once I do bifurcation, I will put it in our step 3 format. So let's write the step 3 format. I had 3 items earlier. I'm going to add 4th item here. So I'll remove this and call it as inspection, material, movement, setup, and machining. The overall cost was 2 crore 61 lakh 80,000. In that, 35% is inspection. Setup is also 35%. Material machining is 20%. And this is 10%. You will have to write the appropriate driver for this. So inspections, material, movement, setups, machine hours. You want to do 3 and 4 together, you do it. Or at the stage itself, because I have the drivers here, I put a total and write it. All that is your wish. Problem is over. I'm not even doing the problem also. I'm not even doing the question also, because I just wanted you to give that comfort that only one question this chapter is. This chapter doesn't have 4 questions or 20 questions or 30 questions. It is only one question. Beyond this, you see here, I do that bifurcation 91, 63, 52, 36, number of setup, machine hours, number of metal movement, number of inspection. You get the division. You see how I've written the rate per setup, per machine hour, per movement, per inspection. This is the right way. In exam, do you need to write it? No, you just write the rate, that is sufficient. What will I do? I'll take the rate from here, multiply 100, 125, 600, 400. I get the overhead cost, remove the overhead figure. No change in my steps. I've made zero changes in my steps. You can look at the steps I have followed. Zero change made in the step. Only one change was they did not give the overhead figure, so I had to do reverse working in step 1. They did not give the cost for every activity, so I had to do little bit of calculations. I had to do just little bit of calculations and I'm done. In the recent exam, ICI tested something like this, where there was a reapportionment on top of a reapportionment. If you remember your September 24 question paper, you will understand something like this would have happened. I'm not discussing the MCQ, but like this, if you do the concept MCQs, things will automatically fall in place. Not only for this chapter, I'm talking about all the chapters which are there. Clear? Any doubts till now? Let me go to third question. RST Limited specializes in distribution of pharma products. It buys from the pharma companies and resells to each of the 3 different markets: general supermarket chains, drugstore chains, chemist shop. I'll do the entire question, but let me first read out the full problem. Following data: average revenue per delivery, average COGS per delivery. Revenue minus COGS will give you gross profit. Revenue minus the COGS will give you the gross profit. Number of deliveries is 330, 825 and 2750. Number of deliveries is nothing but, in short, number of units, like number of units. In the past, RST Limited has used gross margin percentage to calculate the profit. In the past, what I was doing, gross margin I was calculating. Company plans to use ABC to analyze the relative profitability. Five activities, five drivers, everything is given here. Customer purchase order processing, line item ordering, store delivery, cartons dispatch, shelf stocking. When you look at a supermarket or when you look at a drugstore chain, these are the five activities. The drivers are also given. April 2020 operating cost other than COGS, other than COGS. So what is other than COGS is operating cost, or technically overhead cost. Technically it is the overhead cost. It is 827 970. Can you tell me the total of this? Quickly add up the total. Sorry, we are getting the same number. If we don't get the same number, then there is some other cost which could be there. The question will give you that. So now, beauty of this question is, this is my column 1, this is my column 2, the name is my column 3, the quantity is my column 4, column 5 is I divide and get the rate, column 5 is I divide and get the rate. Can you quickly divide and tell me? 2 lakh 20 divided by 5500, 175 divided by 58 520, 195 by 3905. How much? 50. 2 lakh 9 by 2 lakh 9, 1. Last one, 28 160 by 1760. Step 3 is already done here. Step 3 is already done in this question. Obviously, in note, you'll have to present it, but I'm just telling you that these are exam questions, typical exam question. I'm not trying to make some simpler questions and all here. These are typical exam questions. So this is my step 3. The step 3 is automatically done in the question. In fact, there was one exam where they gave this rate also. They gave the rate also, saying that these are the cost driver rates. Other data, this is for writing in the step 4. This is for writing in the step 4. Required. Compute gross margin percentage for each of the distribution channel and compute operating income. Operating income is EBIT, that is after all expenses, after all your expenses. Compute per unit of the cost allocation base for each of the five activity area, which is what you did. Compute rate per unit of the cost allocation base for each of the five activity area. In simple words, compute cost driver rate. Compute cost driver rate. Compute the operating income using what? Activity based costing information. Challenges and all, this is more of a theoretical part. So here traditional they have not asked, because traditional they have not told how are they absorbing. In one exam similar thing was there. They told traditionally the cost was divided in the ratio of number of units, number of units. In this exam they have not given anything, they have not given anything. So no, just so no absorption basis has been presented. First I will do the requirements. Let's understand. Gross margin percentage for each of the three distribution channel and operating income. Operating income means after all expenses. Operating income will be only for total. I cannot do it for, I cannot do it for the what to say, product wise, because I was not absorbing the cost. I was not absorbing the cost. So here we're going to first start with doing the profit statement. I'll do the profit statement. You'll be in listen mode. Then I'll do ABC, then do an ABC profit statement, and then close the question. So first is profit statement under existing method. Particulars. This involves a lot of calculation. We have general supermarket chains. drugstore chains, chemist shop, and total. Every question focus on appropriate format, things will automatically fall in place. Revenues less COGS. They have given revenues in the question. They have given COGS in the question. The difference is called what? Gross profit less operating cost, operating income, technically EBIT. Operating income is technically called EBIT. Now coming to my revenues, question says average revenue per delivery 84,975. Number of deliveries is 330. So 84,975 into 330. The next one 28. Just give me a minute. Just 1 minute. 28,875 into 825. 5,445 into 2750. This is the revenues part. COGS is given 82,500 into 330. 82,500 into 330. 27,500 into 825. 4,950 into 2750. It involve when you do it, it take a lot of time for you to do this calculation because the numbers are little huge. So I get this. I get my GP and operating cost was 827 970 and we get this GP margin, operating margin. What is operating margin is on the operating profit, which can be done only for the overall because I don't know the breakup. The problem is how much of this 827 should go to drugstore, how much should go to chemist shop, how much should go to general supermarket chain. We don't know. That was the earlier methodology. So my GP is now this divided by the revenues into 100. 3%, 4%, and 9%, and overall is 4.96%. And NP, net profit by sales, 3.72%. Same statement you have to repeat. Only thing is this 827, write 1 lakh for first product, 2 lakh for second, 5 lakh, something you have to distribute. Something you have to distribute and then complete it. Clear? Any doubts on this? This is the traditional methodology. This is on the traditional methodology. Just give me a minute. I think there's some important call. Hello. Okay, so this is the traditional method. Now, to shift to ABC, somehow you have to segregate this 827 to the three product lines using a recovery rate. That recovery rate you have already done and told me 5 rupee, 40 rupees, 3 rupees, 50 rupees, 1 rupee, and 16 rupee. 40 has to be multiplied with number of orders 385, 990, and 4125. 3 has to be multiplied with number of items. What is number of items? Is listen here. 385 into 14, 385 into 14, 990 into 12, 4125 into 10, 4125 into 10. 50 has to be multiplied with number of store deliveries, number of store deliveries, which is total number of deliveries 330, 825, and 2750. Then cartons dispatched, number of deliveries into number of cartons, number of deliveries into number of cartons, and shelf stocking time, number of hours per delivery, per delivery. So 3 into the number of delivery, zero point 0.6 into the number of delivery, zero point 0.1 into the number of delivery. Once you get this, this is how it will look. 162 for the first product, 190 for the second product, 474 for the third product. You have to segregate this, and I will have to repeat this statement again now. You'll have to repeat this statement again. Only change I'm going to do is less operating cost, which is what? 162, 910, 190, 410, 474, 650. No rounding of issues and all in this question. See, when I look at gross profit, chemist shop was very highly profitable. Now also it is highly profitable, but still the difference is not that huge now. The difference is not huge. So ABC will give me accurate profitability. ABC will give me accurate profitability. Again, the same 5 steps. I have not deviated from the steps. Step 1, calculating OAR, not needed because traditional is not there. Step 2, we calculate cost per unit. After cost, profit and sales. After cost, profit and sales. Step 3, cost driver rate, which is already done in the question I did. Step 4, I did the multiplication part. Step 5, I've done the profit statement again. I've done the profit statement again. No difference at all. Any doubts on this? Any doubts on this? ABC will revolve around this only. Clear? Can we proceed? Let's look at this question. This is simpler question only, but slightly different calculation. The reason for doing this is it is slightly different computation around. Let's read it. Baby Soft is a global brand created by Bioorganic Limited. Company manufactures 3 range of beauty soap: gold, pearl, and diamond. Budgeted cost and production is as follows. Production of soap, resources per unit, like the first question we did. The only difference is first question had only one raw material. Here you have a raw material called oil, cocoa butter, filtered water, chemical. Second headache, this is in ml, this is in gram, this is in ml, this is in gram. You need to add all of this for some purpose. You'll understand the purpose in some time, but you have to add up all this. Some is in ml, which is liters, and some is in grams, which is your normal kg weights. Then direct labor, 30 minutes, 40 minutes, 60 minutes, 10 per hour, 10 per hour, 10 per hour. Usual question. Bioorganic Limited follows an absorption costing system and absorbs its production overhead using which rate? The direct labor hour rate. Exactly same like the first question we did. The which were budgeted as what? 1 lakh 98. Now Bioorganic is considering ABC system. For this, their cost drivers are forklifting cost, weight of material lifted, direct labor hours, number of machine operation. In fact, this was exactly the first question we did. The only challenge here is on the weight part. On the weight part, what we are going to do. The number of machine operations is 5, 5 and 6 for Baby Soft Gold, Baby Soft Pearl and Baby Soft Diamond. Consider mass of 1 liter of essential oil and filtered water to be equivalent of 0.80 and 1 kg respectively. Mass of output produced is equal to mass of input taken together. Exactly same as the first question we did today, but only changes this liters, kgs, how do I add them together? Liters and kgs, how do I add them together? Otherwise, there's nothing there in the question. I'm going to do all the 3 steps where I will spend more time on that weights part. On the weight part alone, I'm going to spend little bit extra time. And this weight part which you're going to do here, you could have understood this in case you have to do this MCQ. You have to do this MCQ. The adjustment would have come here itself. So when you do the MCQ, if you are able to add up this properly and tell me the answer, it means you have understood that adjustment. So only thing is application has to be stronger at your end, because when you do MCQ and when I give it as a part of a detailed question, now suddenly you cannot say that only I know this, I'm not able to understand the other parts. That will not work. That is why one full question along with that small concept you do, chapter is over. That's how you need to prepare, you need to revise, so that when you do it for the first time, every question we do it fully. But when you do it for the second, third, fourth, fifth, you have to become smarter, and you should do 2 3 revision. So for doing 2 3 revision, unless you are smarter, you will not work. So let's come back to this question. Let's go back to our step one. Budgeted overheads is given in the question. First question it was given, second question reverse working, third question it was given, fourth question again it is given. So the budgeted overheads, what is the budgeted overhead in the question? 1,98,000. What's the suitable base? Direct labor hours. Can you multiply and tell me the direct labor hours? Quickly multiply. Quick, do the calculation. 4,000 into 30 plus 3,000 into 40 plus 2,000 into 60. Much? Divide by 60 minutes. You'll have to convert into hours. 6,000 hours, 33 per labor hour is my overhead absorption rate. Now coming to direct material, unfortunately I'll have to write multiple items now. I'll have to write multiple items here. So direct material, I underline this and I write oil, butter, water, chemicals. Balance is same, okay? I'm not even changing the product, a product B and all doesn't really matter. Oil is 60 ml, 200 per 100 ml. So 60 into 200 by 100. 60 into 200 by 100, how much? 120. Product B, 55 into 300 by 100. 65 into 300 by 100. 195. Butter, 20 gram into 200 by 100. I think same for all the product, same 40. 20 gram into 200 by 100 into 200 by 100. Filtered water, 30 ml into 15 by 100. Same for all the three products, 4.5. Then chemical, 10 gram into 30 by 100. How much? 3. Then next one is 12 gram into 50 by 100. Next is 15 gram into 60 by 100. 9. This is taken care. Earlier, this was given a single line item. Now I have given it as multiple line item. There's nothing different. Then comes your direct labor. 30 minutes into 10, 30 by 60 into 10, 40 by 60 into 10, 60 by 60 into 10. Because they have given per hour rate. They have given the per hour rate. So 30 by 60 into 10, 5, 6.67, 10. Overhead, we have decided the rate to be 33 per hour. We have decided the rate to be 33 per hour. So for 33 per hour, 33 into 30 by 60, 40 by 60 and 60 by 60. So this is what? 16.5, 22 and 33. And I multiply with 4,000 units, 3,000 units, 2,000 units. Clear? Any doubts on this? Prepare a statement showing the unit cost and total cost. If they don't ask total cost, we stop at unit cost itself. Clear? Any doubts in this? Now I have to shift to ABC. ABC is also very simple. I have three activities: forklifting, supervising, utilities. Cost is given 58,000, 60,000, 80,000. CD name, weight, DLH, number of machine operations. Copy paste these three here. And you will have to first write what is the forklifting, what is the weight of material lifted for product A, weight of material lifted for product A, product B, product C, or whatever name the name says, pearl, gold, something, and then add up and write it in the top. Add up and write it in the top. Write labor hours separately, add up and write it in the top. Write machine operation separately, add up and write it in the top. This is what we are going to do. In that, only thing I want to focus is weight of material lifted. Now listen, if it was everything in grams, I would have added it together. What question says is mass of 1 liter of oil. 1 liter of oil is equal to 0.80 kg. 1 liter of oil is equal to 0.80 kg. So what we need to do is, this is not 60 ml. This is 48 gram. This is 48 gram, because 1 liter is equal to what? 0. 0.8. 1 liter is equal to 0.8. So I will not call it as 60 ml. I'll call it as 48 gram. I'll call it as 48 gram. This is not 55 ml. This is not 55 ml. This is what? Into 0.8. This is not 65 ml into 0.8. Second item is in gram. Third item is in ml, but there they have said 1 liter of oil is 0.80 kg, but filtered water is 1 kg itself. 1 liter of filtered water is equal to what? 1 kg itself. So whether you call it as ml or gram, both are same. Ml or gram, both are same. So this item is 30 gram, 30 gram, 30 gram. And the last item is 10 gram. Now I'll add up all the four and tell what is the raw material gram per unit. What is the raw material gram? 48 gram, 20 gram, 30 gram, and 10 gram. All put together how much? 108 grams into 4,000 units. 108 grams into 4,000 units. So this is, I divide by 1,000 to convert into kgs. I'm dividing it by 1,000. You can leave it in grams also. That's okay. So 432 kg. 432 kg. 108 gram into 4,000 divided by 1,000. Into 4,000 divided by 1,000. Second item, 44 plus 20 plus 30 plus 12. 106 into 3,000 by 1,000. 318. Third one, 52 plus 20 plus 30 plus 15. How much? 117 into 2000 by 1000. 234 kg. We'll put a total of these three, which is some 984 kg. That's all. I'm not doing anything beyond this. I'm not doing anything beyond this. I'm kind of done with the question. Understand this. If you're able to understand this properly, completing any number of chapters today itself, if I want, I can complete the entire costing also, provided you're able to pick on those important items. Because whatever last 1 hour I've spent is not to solve any extra question. It is just to tell you that every question, I wanted to first get you that comfort, saying that this is one chapter where everything is format driven. It's not that every chapter is going to be like this, but this chapter, everything is format driven and also very well tested from an exam point of view. It is very well tested from an exam point of view. I'm kind of done. So just to check your understanding, give me answer to this. This MCQ, you calculate and give me answer. Same example only this is. What's the answer you get? 1330 kgs. This is what I expect you to do. Complete all concept MCQs. See, whatever. Now, for example, this MCQ you may struggle because it's not part of those four questions which I've discussed, but it's part of the question bank has that question. ICISM has briefly discussed it. So one option is solving that entire question, which takes up a lot of time. I cannot mark every question, so that's why I marked four important questions. The four important questions is not that something which will come in exam. The four question basically means I can discuss most of the concept. My purpose is only to discuss the concept to you. So maximum concepts can get discussed with those questions. That's why I have discussed it. Clear? Any doubts on this? I think some 10 12 MCQs are there. If you can solve these 10 12 MCQs and the four questions which we did, repeat it if you want. You don't want to repeat it, don't repeat it. Take any question from ICISM or take questions from question bank. Do something so that in another half an hour or 1 hour, whenever, not now, but after the class gets over, half an hour or 1 hour maximum, this chapter gets over. 1 hour and the chapter gets over. Clear? Any doubts on this? Okay, I'll take a break of some 15 minutes and then I proceed to a next chapter. We'll take 15 minutes break. Okay, I'll move to next chapter. But before that, just one small thing in the earlier chapter. So in the concept book itself, in the initial pages, that is initial one third page, you will know the different type of question. This is the first question we did. Cost per unit under traditional versus ABC. Reverse working is that second example which I had shown. Redistribution is what got tested in September 24 exam. That got tested in September 24 exam for which concept MCQ is there. So some question I have tested in the form of concept MCQ. Some questions I have done it fully also. So redistribution part came in the latest exam. If you are able to see one question in the first category, one question in the second category, one question in the third category, chapter gets over again. Chapter gets over again. So this is how we have done. Now when I move to marginal costing, for marginal costing, we have variety of questions which are possible, starting from a basic question, going on to something called as a limiting factor analysis and other areas. Before I discuss the chapter in depth, you need to be aware of one item called as variable cost and fixed cost. That distinction is very, very critical. Though people understand it, people know it, but still a lot of us make mistake, even including me at times. I sometimes make mistake on variable versus fixed cost. If that distinction is not clear, you will not understand the chapter itself. So variable cost versus fixed cost, if you don't understand, you will not get any clarity. Now before I start, let me take an example on variable versus fixed cost. Once we understand this properly, everything else becomes very simple. Let's assume my school takes 1,000 students. They take you to an amusement park. Some 1,000 students are taken to an amusement park. There's an entry fees in the amusement park. So every person who goes, 500 per student. And I told the amusement park that only my students should be there. Please don't allow anyone else. So they are saying you have to pay extra 1 lakh rupee. Extra 1 lakh rupee. 500 rupee per student they will charge. And a block fee of 1 lakh. Block fee of 1 lakh. This is what the amusement park has told me. So I told okay, and I paid them 1 lakh plus 1,000 into 500, 6 lakh rupees I paid. Next year, the school says 1,500 students. 1,500 students. And what the other person has said is block fee will increase by 25%. Entry fee will increase by 20%. Can you tell me what is the total payment to be made? Tell me the total payment to be made for 1,500 students. How much? 10 lakh? Okay. 1 lakh will become 1 lakh 25 and 500 will become 600 into 10 lakh 25. This is a very simple example. I have never seen any student in my class making a mistake in this example. But the problem is ICI does the same thing. They will say block fee, they'll say it is a fixed cost, but they will mention block fee is 100 per student. Block fee is 100 per student, and in bracket they'll say it is fixed cost. What student smartly does? 100 at 25% and multiplies with 1500 student. Problem that stage itself wrong. The problem goes wrong at that stage itself. Any change in variable cost means a change in variable cost per unit, and any change in fixed cost means a change in total fixed cost. If you understand this properly, 50% of marginal costing is over. If you don't understand this properly, nothing can be done. This example is very simple. But what ICI does is they'll say entry fee. Instead of telling 500 per student, 5 lakh, and in bracket they'll say variable. Or they may not tell you it's variable, but you know it is variable. What your mind tells you to do is, if I give you like this, no, what you will do is you will add 20% to 5 lakh and add 25% to 100. Both are wrong. Both are wrong, and entire solution goes wrong because you made mistake at the first stage itself. So unless you are tackling this properly, I cannot do anything in this chapter, and you also cannot do anything in this chapter unless you tackle this issue properly. That is variable cost. Any change in variable cost means a change in variable cost per unit. Any change in fixed cost means a change in total fixed cost. Every problem, two misleading information. There are two misleading information. First misleading is fixed cost per unit. If some question tells you fixed cost is 25 per unit, please delete and write 25 into 1000, 25,000. If it's not 25 per unit, fixed cost should not be at a per unit level. It should always be calculated at a overall level. Unless you get that grip, nothing can be done. That's a common mistake students make. Second, total variable cost. This is also misleading. I don't need total variable cost. Give me variable cost per unit. Give me variable cost per unit. Don't give me total variable cost and complicate things for me, because if you give me these two information, you are unnecessarily complicating things for me, and which is what ICI question has to do and will do it also. They will complicate things for you. If you are able to tackle these two issues properly, then problem is almost over. Problem is almost over if you're able to tackle these two things properly. Any change in variable cost means a change in variable cost per unit. Any change in fixed cost means a change in total fixed cost. This does not come to me in my chapter 14. In my concept book, I discuss this in chapter first itself, where I discuss intro. It is like golden rules of accounting. Like you have your golden rules of accounting, this is golden rules of costing. If you are not aware of golden rule, obviously you cannot write journal entry. Same way, if you don't know the golden rules of costing, I cannot do anything. Fixed cost does not change with volume, remains constant. Variable cost changes with change in output. There is an in-between category called semi-variable cost, which if it is there, I have to bifurcate that into variable and fixed. You'll understand as we proceed. But there's an in-between category called semi-variable cost, which is neither fixed nor variable. Total fixed cost remains constant irrespective of volume. Variable cost per unit remains constant. Variable cost per unit remain constant. The most important part, any change in fixed cost would mean change in total fixed cost. Any change in variable cost would mean change in variable cost per unit. Cost for 10,000 units, 1 lakh. This is last year cost, okay? Production for next year is 15,000. Increase in fixed cost 5%. Increase in variable cost 10%. Last year fixed cost is 60,000, which is included in this 1 lakh. Included in this 1 lakh. Tell me last year what is total fixed cost and what is variable cost per unit last year. Total fixed cost and variable cost per unit. Give me these two numbers. What is total fixed cost last year? 60,000 given. What is variable cost per unit last year? Variable cost per unit is how much last year? 4 rupees. 1 lakh minus 60,000, 40,000 divide by 10,000, 4. These are the two good numbers I have. I don't want anything else. From 4, I will add 10%. With 4, I will add 10% and multiply with 15,000 units. Multiply with 15,000 units. And with 60,000, I will add 5%. With 60,000, I will add 5%. No multiplying with number of units. No multiplying with number of units. What happens if you do at per unit? Entire answer goes wrong. Entire answer goes wrong. Clear? Any doubts on this? So 4 per unit, 66,000, 60,000, 63,000. You see the highlighted. This is relevant. The other one, irrelevant information or misleading information. Irrelevant or misleading information which is given to confuse you. It is given to confuse you. You will have to be very clear in your thought process. Some question will say fixed cost is 20 per unit. Your mind knows it. See, when I gave this example, I have not seen even one student making a mistake here. But when ICI gives this in number of units, everyone makes mistake, which is what you have to control. You will have to control that correctly. If you are able to do it, we are kind of taken care. Clear? Any doubts on this? Fixed cost, any change in fixed cost, it's not only in this chapter. Okay, in marginal costing, I'll use it at few places, but I'll be using this again in budgetary control. I'll be using this to solve a question maybe in labor chapter. I'll use this to solve a question in material chapter because I said this is golden rule. This is golden rule. I don't want you to make mistake in the golden rule. Any change in fixed cost means a change in total fixed cost. Any change in variable cost means a change in variable cost per unit. In other words, any change would mean a change which remains constant. Fixed cost at the overall level remain constant. So change means that is changing. And variable cost per unit remain constant. So change means that is changing. Clear? Any doubts on this? This is the first important information. Second, in your cost sheet, if problem is silent, direct material, direct labor, direct expense are variable in nature. Some question will say direct material so much, direct labor so much, direct expense so much. They are not telling whether it is variable or fixed. Problem silent, material variable, labor variable, expenses variable, selling overhead is variable. Selling overhead is variable. The format of cost sheet and all I'll discuss when I go to cost sheet. Fixed, admin overhead is fixed. Admin overhead is fixed. Everything is there in the book. So when I want you to solve question along with me, I'll tell you writing and all I don't need as of now. If you still want, you do it. That's your wish. Your factory overhead, assumption based. It is assumption based. You want to take it as variable, take it as variable. You want to take it as fixed, take it as fixed. That's your wish. Clear? This is the second part you have to understand. This will help me in calculating cost properly. And once I calculate cost, we see without knowing the right cost, obviously I cannot get to the answer because cost is the most important part. When cost itself is not calculated properly, how do I get to my right answer? Clear? Any doubts till this? Clear? Okay, once this part is handled, I come to a format called marginal costing income statement. Marginal costing income statement. There is a format. Again, it's a format driven area. But if you follow format, extra time. If you follow formula, time saving. Depends on your comfort level. If you get comfort, formula. If you don't get comfort, we'll do it in the format based. Both will give me the right answer. Now, format is very simple. Sales less variable cost, we get something called as contribution. The word contribution means it contributes. It contributes towards recovery of fixed cost and earns profit. Then I do less fixed cost profit. Particulars per unit total I wouldn't want to write this fixed cost per unit and profit per unit because both are misleading data. Both are misleading information. I don't want to write. Variable cost per unit is also misleading, but I want to calculate contribution, so I'll have to do it. But be very clear. Don't even try writing fixed cost per unit. No other option in a question, I may write it. It's not that I won't write it itself. But if you want, you can write it. But what is critical is total fixed cost and total profit. This is the format we are going to follow. So sales less variable cost contribution less fixed cost profit. Now marginal costing has so many formulae. I don't even understand all of that. I know only one equation, and the equation will give you 20 different formulae, which is what you're doing it in the question. What is that equation? Equation is very simple. Break even point plus margin of safety is equal to total sales. Break even point plus margin of safety is equal to total sales. And I'll tell you to write this. Listen for some time. I'll tell you to write this because this is what crux for me all about. Break even point means the sales at which we make no profit, no loss. So this will recover fixed cost. This will recover fixed cost. Margin of safety gives me profit. Margin of safety gives me profit. Fixed cost plus profit is equal to total contribution, and this BEP into PVR, again into PVR. Now why I'm giving this equation is break even point into PVR is equal to fixed cost. First formula. Break even point is equal to fixed cost divided by PVR. Break even point into PVR is equal to fixed cost. Take PVR the other side. Third formula, PVR is equal to fixed cost by break even point. I can write three formula using this. So I'll repeat again. BEP into PVR is equal to FC. PVR is equal to FC by BEP, or BEP is equal to FC by PVR. Three formula I have given you now. Then MOS into PVR is equal to profit. PVR is equal to profit by MOS, or MOS is equal to profit by PVR. Total sales into PVR is equal to total contribution, or PVR is equal to total contribution by total sales, or total sales is equal to BEP plus MOS. BEP is equal to total sales minus MOS. Total sales minus MOS. Or MOS is equal to total sales minus BEP. I can write 20 different formula from this equation, and which is what I will be doing in 80% of marginal costing question. Apart from this, something extra obviously is there, but 80% of the question revolves around this equation only. BEP plus MOS. I don't expect even one formula to be remembered. Understand logic, everything is very clear. BEP plus MOS is equal to what? Total sales. BEP recovers fixed cost. MOS recovers profit or provides profit. Total sales gives you total contribution. Now, if I ask you what is the formula for PVR, now three formula I have. Fixed cost by BEP, profit by MOS, total contribution by total sales. Now the headache is question 1, I'll be using formula 1. Question 2, I'll be using formula 2. Question 3, I'll be using formula 3. Students suddenly get confused, so many formulae. It's not so many formulae. You have not understood in the right manner. If you understand the formula in the right manner, you know which formula to be applied. It doesn't end here. The same thing, same formula, I'll write again. BP units, MOS units, sales units. This is multiplied with contribution per unit. Multiplied with contribution per unit, and you get fixed cost, profit, total contribution. Fixed cost, profit, and total contribution. So somebody asked, what is the formula for contribution per unit? Fixed cost divided by break even point in units. Fixed cost divided by break even point in units. What is the formula for contribution per unit? Total contribution divided by sales in units. What is the formula for contribution per unit? Profit divided by MOS in units. What is the formula for MOS in units? Total sales minus BEP. What is the formula for MOS in units? Profit divided by contribution per unit. Profit divided by contribution per unit. Is there any end to the number of formulae? I can write now 40 different formula. If I want, I can tell write formula 1, formula 2, formula 3, formula 4, formula 5, and 40 formula you'll write in your notebook. And what student is trying to do is remember all the 40. I'm saying where is the need to remember? You just need to know two equation. And this also you know need not remember. There's nothing for you to remember. Understand logic very clearly. Understand the equation properly. If you understand equation properly, things is automatically taken care. Write the equation. This is what I revolve around in the entire. This you write it in your notebook. BEP plus MOS is equal to total units. This is using units. Second is using value. I gave using value first when I explained. Write this equation. Because this is a bigger chapter, I'll first do half of the concept, do questions, and then again do another half of the concept. This formula should keep coming in your mind. You should be able to visualize this, cross multiply, and keep giving me different formulae. Unless you are able to do that, this chapter will become challenging. Like I had 5 steps in ABC. I think this will tackle 60-70 percentage of my question. I cannot say that marginal costing I can tackle every type of question with the single formula and all. No, there are a lot of concepts which are there, and some of the exam questions have come from CA final and all in exam. So it is not that I can tackle everything, but this is a good start for you to absorb major chunk of the problem. If you are able to visualize this, then I can keep discussing the balanced concept. I have I think the number of concept in this chapter is could be some 20-30. 21 concepts are there. I will discuss first initial 10-12 concepts. I will do certain problems. MCQs, obviously, as I said, you will be doing it later. And once we do problems, one good part is the problem may not take that amount of time which it has taken in ABC. One problem we took 30 minutes. But here, one problem I can solve it in 5 minutes and all, and you will also solve along with me only. So this I can do more number of questions. Both of us can do more number of questions. Let's quickly go to concept one. Marginal costing is a technique of costing which assists in decision making by differentiating the cost based on nature, variable versus fixed. Variable cost is incurred on every unit produced. Total variable cost is directly proportional with volume. Variable cost per unit is constant. Fixed cost is incurred as a whole and not for every unit. Total fixed cost remains constant. Fixed cost per unit is inversely proportional with volume. Misleading information. Misleading information. Fixed cost per unit and total variable cost can lead to mistake while solving question. In any problem, you should first find total fixed cost and VC per unit and then give effect to the changes given in the question. You are understanding this really well now. After doing 15 question, you will still do the mistake. That's the only challenge. That control is what is needed. When I gave you an initial example, nobody made a mistake, and this has been my experience for all the batches. I would have taken some 20-30 batches of costing. Every batch student never made mistake in telling me the first example. But suddenly, when I come to a problem solving, suddenly you start thinking a lot. When you start thinking a lot, you end up making mistakes. This is the format which I said, where I have a not applicable for fixed cost, not applicable for profit. Now, there is some data. If you read this data and calculate it, you will absorb or you will kind of apply the learning which we had. For example, just first question, direct material cost 80,000, direct labor cost 40,000, 5,000 units have been manufactured, material will increase by 10%, labor will increase by 20%. What is the variable cost per unit post increase? For doing this 10% 20% change, first you have to calculate variable cost per unit, because material and labor is what? Variable in nature. Material and labor is variable in nature. So wrong information. 80,000 is wrong. What is the right information is 16. 40,000 is wrong information. What is the right information? 8. In 16, I will give effect of 10%. In 8, I'll give effect of 20% and I calculate the cost. That is kind of taken care. This is where students make mistake. Again, I'm repeating, my job is to tell you where you make mistake. And if you make mistake at the starting itself, nothing much can be done in the problem. I cannot do anything in the problem when you make a mistake at the beginning itself. The basic equation, once you understand this basic equation, every formula is driven from this except for few areas like shutdown point or indifference point, which I'll have to add later on. Contribution, the term contribution means it contributes towards recovery of fixed cost. It contributes towards recovery of fixed cost and provides profit. So contribution is equal to sales minus variable cost, or in the reverse calculation, profit plus fixed cost. Profit plus fixed cost. Contribution basically contributes towards recovery of fixed cost and generates profit. PVR. Can you tell me 3-4 formula of PVR I gave you till now? Tell me the first formula of PVR. You'll have to tell me any formula you tell. Tell me. Fixed cost divided by break even point. Then profit divided by margin of safety. Then contribution divided by total sales. This contribution, if you write per unit, it's called contribution per unit. And sales, if you write per unit, it's called selling price. That is also one more formula. Contribution per unit by selling price. Contribution by sales, contribution per unit by selling price. Contribution per unit by selling price. I'll come to this. This is a very important formula. Will be useful to solve many questions. Now let's get back to my example. I'll keep it as 10,000 units, 20,000 units. Okay. Two example. Sales 10,000 into 10 rupees, 20,000 into 10 rupees. Variable cost 10,000 into 4 rupees, 20,000 into 4 rupees. Contribution 60, 120. Fixed cost is 20,000, 20,000. Profit is 40 and 1 lakh. Profit is 40 and 1 lakh. I said I'll calculate net profit margin. Net profit margin is profit by sales, 40% and 50%. Now, in the above example, no change is done in selling price, no change is done in variable cost, no change is done in fixed cost, but still my profit margin is going up. Still my profit margin is going up because NP margin is again a misleading ratio. NP margin again is a misleading ratio. That is where PVR came. That is where PVR came. Tell me the formula for PVR. What is the formula you said? contribution by sales 60,000, 60%, 1 lakh 20 by 2 lakh is also 60%. Or you have another formula, change in contribution by change in sales. Apply and tell me what is the change in contribution between two example. Change in sales 1 lakh, 60,000 by 1 lakh, or do change in profit by change in sales. Same 60%. What ICI does is they remove all this and they just give you this. They give you sales, profit, and then say calculate fixed cost, calculate variable cost, something like this comes in exam. The student is thinking what to do because I don't know anything in between. So you apply the formula of PVR. What is formula of PVR? Change in profit by change in sales. Change in profit by change in sales. Once you get PVR, in that equation, contribution is equal to sales into PVR. Contribution is equal to sales into PVR. That is why again I'll have to keep going back to the equation. As you do more problems, the equation will get fully registered in your mind. I'll suddenly ask what is the formula for break even point. You'll be thinking I'll tell the answer itself because the equation is fully registered in my mind. If the equation gets fully registered in your mind, you'll be able to handle any type of question. What I say I did in one exam is they said sales and they gave total cost. They did not give profit. The student is thinking what to do. Only thing you have to do is sales minus total cost and write profit and then do change in profit by change in sales. Then do change in profit by change in sales. Small adjustments here and there they do because you have not seen it earlier. You start struggling in the exam. So there can be any kind of changes here. So I have two more formula. First formula is change in profit by change in sales, change in contribution by change in sales. Is this the end? No end. Other formula, profit divided by margin of safety, fixed cost divided by break even point. So there is end, there's no end to the number of formula for PVR. I can keep adding any number of formula. I can keep adding any number of formula for PVR calculation. Clear? Any doubts on this? Any doubts on this? In this example, can you tell me what is variable cost ratio? What is variable cost ratio? Is variable cost by sales. Tell me the variable cost ratio. I want participation. I want participation 40%, 40,000 by 1 lakh. So there's another formula which is said PVR plus VCR is equal to 100%. PVR is profit, VCR is cost. PVR is contribution, VCR is variable cost. In one exam question, I said VCR is 60%. You have to understand PVR is 40%. You have to understand PVR is 40%. Like this, here and there, small changes you'll have to tackle. So PVR plus VCR is equal to what? 100%. Clear? Any doubts on this? Any doubts on this part? All these examples will test different concepts which are there. I have told you so many things, each of this will get handled there. Break even point means what? No profit, no loss. At BEP, fixed cost is equal to contribution. I not given a formula. The formula is there in the equation. The formula is there in the equation. I'm not given the formula here. Clear? Any doubts on this? Margin of safety is basically the sales which gives me what? Profit. That is what gives me profit. It is called cushion available. It is called cushion available. For example, if I have to run a batch of classes, I need, let's assume, 40 students to break even. If I have more than 40, that is the cushion I have. That is the cushion I have, which is also called as allowable drop in sales. Allowable drop in sales. If sales drop by that much, I'm not bothered, but if it drops more than that, I get worried. I'll get worried. That's called allowable drop in sales. Clear? Any doubts on this? Sales to achieve desired profit, there is a formula here. Zero need to understand this formula. I'll explain now. Sales is equal to contribution by PVR. Contribution by PVR. Where did the formula come? Formula has come from the equation. Contribution is equal to profit plus fixed cost, and that profit is called desired profit. That profit is called desired profit. So desired profit plus fixed cost. If you divide by PVR in any formula, answer you get it in rupees. If you divide by contribution per unit, answer you get it in units. BEP can be in units, can be in rupees. MOS can be in units, can be in rupees. So anything can be in units, anything can be in rupees. Both are possible. Both are possible. So if you divide by PVR, answer will be in rupees. If you divide by contribution per unit, answer will be in units. Anything can be computed. This formula is not to be remembered. Students try to dump so many formula in their mind and end up struggling in the exam. Understand the logic. Sales is what? Contribution by PVR. What is contribution? Profit plus fixed cost. What is profit? Desired profit. Profit is desired profit. Then how do I calculate profit? Profit I can calculate as, I'm not given the formula here. Profit is equal to contribution minus fixed cost. What is contribution? Sales into PVR. Sales into PVR. So unless you are very clear on that equation interlinkage, you may start struggling a little bit. But again, I'm saying it's not going to be very difficult. It's not going to be very difficult to understand the equation. I know the kind of difficulty this is going to possess. So as long as the equation becomes very, very clear in your mind, and the equation is also not very tough. You can write in your notebook in case in an exam you are not able to remember, write that and then rework the formula. You will get all the formulae. The only change I want to say is some question will say, I want profit after tax. I want profit after tax. Marginal costing stops at PBT. Marginal costing stops at PBT. So if you give me PAT, I have to convert that into profit before tax and apply in the formula. How do I convert? This is the formula, but again, I don't expect you to remember the formula. Logic is very simple. PBT less tax PAT. Let's assume profit after tax is 1 lakh. Tax rate is 20%. Tax rate is 20%. So PBT is 100, tax is 20, PAT is 80. If 80 is equal to 1 lakh, what is 100? If 80 is equal to 1 lakh, what is 100? You will have to do cross multiplication. You will have to do cross multiplication. What number you get? 1 lakh? 25,000, which is what a formula is given. Again, I'm repeating, I don't remember any formula except for few places. It's not that I'll tell you not to remember anything. There are places where I'll tell you to remember formula. In fact, marginal costing is a heavily formula dependent area. But till now, I've not told you to remember anything, and I've covered ninth concept. I have only 21 concepts here. I may put a stop at some stage because once a very tricky concept comes, I'll have to put a stop and do the basic question, and then I come to the tricky concepts. Any doubts in this? Okay, I'll come back to balance concepts later. Let's do few questions so that you get a grip, because only discussing the concept alone will not help. So let's do certain questions now. I'll do question 1. Following information is given by PQR Limited. Year, sales, profit or loss. Just sales 1 crore 80, profit is 3 lakh, loss is 3 lakh 80, and 2 crore 40 and 11 lakh 20. Calculate break even sales in 2014, 2024, 2025. It is estimated that variable cost will go up by 5%, fixed cost will reduce by 4 lakh 80, selling price will remain same. Calculate the sales volume to earn a profit of 15 lakh. This came in May 24 exam. This question has come in May 24 exam. First is I have to calculate break even sale. What do you need for break even sales? Fixed cost, PVR. Fixed cost and PVR. First I'll calculate PVR. Then I do a marginal costing statement where I'll get variable cost and fixed cost as balancing figure. I can do it in the formula route. Formula route I'll start doing later. Once I get the fixed cost, I'll divide by PVR. BEP is done. 22, 23 as well as 23, 24 both should give me the same fixed cost. If it gives me different, I've done a mistake. I've done a mistake. Then 24, 25 variable cost will go up. Fixed cost will reduce, selling price will remain same. Calculate the volume to earn a profit of 15 lakhs, something around that they have asked. Let's do this. Particulars, you will do along with me. Particulars 2022 23, 23 24, 24 25. Sales less variable cost, contribution less fixed cost, profit. I can solve this question without the statement also. First few question, let's understand the statement. Sales, let's write it 1 crore 80, 2 crore 40, 380, 1120. Clear? Okay. Now we'll apply the formula for PVR. PVR formula is change in profit by change in sales. This is negative 380 is becoming positive. So it's 1120 minus of minus 380. So we'll have to add this number. Right? PVR is equal to change in profit by change in sales. Change in profit by change in sales. How much is the change in profit? 11 lakh 20 minus of minus 380. 15 lakhs. Change in sales. Into 100 to express in percentage. How much is PVR? 25% is PVR. Clear? Whatever practice we are going to do, that will give you grip on the concept. Then you will be able to handle a lot of questions also. 25%. Now listen. Contribution is 25% of sales. Variable cost as well as fixed cost both are balancing figure. Variable cost as well as fixed cost both are balancing figure. This is a usually tested question. Usually tested is this equation. Do into 25%. Into 25%. Variable cost balancing figure is 135, 180. Fixed cost balancing figure is 4880. 4880 for both the years. Balancing figure 48 lakh 80,000. Any doubts on this? Clear? BEP formula you know, please apply it. Get me the answer. BEP is fixed cost by PV ratio. Fixed cost divided by PV ratio. What is the break even point you got? 1 crore. Listen, this is not needed in this question. If you had the selling price, you also need to get it in units. This question, selling price data is not there. I cannot calculate units here. I cannot do units calculation. If question says BEP break even sales, you may have to do both in rupees as well as in units. Some question will say calculate BEP in units. Only units is sufficient. BEP in rupees, only rupees is sufficient. Here, how do you convert? Just divide by the selling price or multiply with the selling price. Either you divide by the selling price or multiply. If you get it in units, multiply with selling price. If you get it in rupees, divide by selling price. I cannot do anything because I don't have data. Next, in 24-25, variable cost will go up by 5%. Fixed cost will reduce by 4 lakh 80. Selling price will remain same. Calculate the volume to earn a profit of 15 lakh. Wait for some time. I'll show you what mistakes you will do. This is 15 lakh. This is 15 lakh. Fixed cost, what is the change they have mentioned? Fixed cost changes 4 lakh 80, reduced by 4 lakh 80. Fixed cost will reduce by 4 lakh 80. So 48 lakh 80 will go down by 4 lakh 80. It will become what? 59 lakh. Now what students do is variable cost will go up by what? 5%. He is in a hurry into 1.05, which is wrong. Variable cost cannot be changed at a overall level. Cannot be changed at a overall level. Now, how do I change it at per unit level? Because I don't know the number of units. I don't know the number of units, but I have to do something. I have to do something because if you do into 1.05, this is what many students would have done in exam, and they would have written this as the answer. Some student, what they would have done, they wouldn't have made this mistake, but they would have taken this contribution and divide by 25% PVR, divided by 25% PVR, and written this answer. This is also wrong. Reason is your PVR will not continue at 25%. Your PVR will not continue. What is the formula for PVR? Contribution by selling price. Contribution by selling price or PVR will change if selling price changes or variable cost changes. Selling price changes or variable cost changes. So the two mistakes which students will do is one, they will add 5% and reverse work, which is wrong. Some student will say, I will use sales to achieve desired profit formula. What is sales to achieve desired profit? Desired profit plus fixed cost by PVR. Desired profit, right? Fixed cost, right? PVR wrong. PVR is wrong. So how do I handle this now? Come down, right? Let us assume, let us assume selling price to be 100. Let us assume selling price to be 100. Write this, write this. Let us assume selling price to be 100. Hence, variable cost is 75 per unit. Variable cost is 75 per unit. In reality, I don't know the number of units. I don't want to know also. I don't want to know. My job is just to complete the answer. Variable cost is 75 per unit. Clear? New variable cost per unit is equal to 75 plus 5%. 75 plus 5%. 75 plus 5%. How much? 78.75. Question crystal clear said selling price is not changing. The question sometimes will say selling price goes up by 10%, 100 becomes 110. I'll change the selling price also. If they say selling price is changing, let me change that. New PVR is equal to contribution per unit by selling price. Contribution per unit by selling price. Contribution per unit is now 100 minus 78.75. 100 minus 78.75. 21.25 divide by 100 into 100. 21.25%. Clear? Any doubts on this? And I'm repeating, students make few of the mistakes. They will Copy paste the same PVR. PVR will remain same if fixed cost changes. Fixed cost has no effect on PVR, but variable cost or selling price will. Now write sales to achieve desired profit is equal to desired profit plus fixed cost by PVR. Desired profit plus fixed cost by PVR. My profit I want is 15 lakh. Fixed cost is 44 lakh. See, this also I will answer in units as well as in rupees, but I don't need units because 100 is my assumption. It's not in the question. So we will answer only in rupees. That's all. If you divide by PVR, answer is in rupees. 2 crore 77 lakh 64,706 is what you would have got. Same is presented as a statement. You want to do it in statement form, do it in statement form. Formula form, do it in formula form. Whichever way you want to do, that's your wish. But assumptions, calculation, because many student in exam took 1 crore 80 and added 5%. 1 crore 89 will go wrong. And at that time, your mind will not tell you to do this calculation, because that's why I said first time, I said any change in variable cost means a change in variable cost per unit. Any change in fixed cost means a change in total fixed cost. You will have to apply that properly. And for doing that, I had assumed earlier sales was 100, variable cost was 75. Now variable cost will increase to 78.75. Contribution will be balanced what? 21.25. It is testing that concept only. Whatever I said initially, that if you are clear on that concept, things will become automatically okay. Let's come to this. A Chinese soft drink company is planning to establish a subsidiary company in India to produce mineral water. Based on the annual sales of 40,000 bottles of the mineral water, cost studies produce the following estimate. Material 100% variable, labor 80% variable, factory overhead 60% variable, administration expense 35% variable. If this was not given, material fully variable, labor fully variable, admin fully fixed, factory overhead your assumption. Factory overhead your assumption. Indian production will be sold by the manufacturer's representative, who will receive a commission of 8% of the selling price. Commission of 8% of the selling price. Commission, variable cost, fixed cost. What is your sense? You'll have to participate. Variable, fixed. Variable because it is a percentage of sales. It is a percentage of sales. It is going to, if they had said variable commission of 25,000 rupees, if they say commission is 2 rupees per unit, then also it's variable only. Then also it is variable. Fixed means it should not change itself. No portion of Chinese office expenses allocated. Calculate the sale price to enable the management to realize a profit of what? 10% on sale proceeds in India. I have to fix the selling price so that I make a profit of how much? 10% of sales. Second, calculate the BEP in rupees as well as in bottles. BEP in rupees as well as in bottles, on the assumption that selling price is 14. On the assumption that selling price is 14. First part, you have to calculate the selling price. Second part, selling price is 14. You have to calculate the break even point. You have to calculate the break even point. First thing, I don't understand any of these. I understand only two information: variable cost per unit, total fixed cost. Other things I don't understand. I don't understand other things. So first thing I need is variable cost per unit. In that, one headache is commission. What to do with commission, I'll explain later, because commission we don't know the number as of now. So first let's calculate VC per unit and total fixed cost. Once that is done, then we can start solving the question. Now write computation of VC per unit and total fixed cost. VC per unit is equal to VC per unit is equal to, I have done it in a tabular form in the printed solution. Here I'm doing it faster. Okay, VC per unit is equal to, right. You're going to solve along with me. When I tell not to solve, then only you'll have to stop. VC per unit is equal to material. What is the nature? fully variable 2 lakh 10 plus labor 1 lakh 20 plus factory overhead 55 admin. This statement is done for how many units? 40,000. Our final answer can be anything else. Okay, doesn't really matter. This was done for 40,000. So I divide by 40,000. Tell me the VC per unit. This excludes commission. Commission will handle it later. How much? 9.9. Get me total fixed cost. You should not divide by 40,000. That's all. Get the total fixed cost. Next line item. TFC is equal to material. Any fixed cost? 0. Labor 30,000. Factory overhead admin, sorry, 26,000, sorry, 26,000. Add up. Clear? My problem is 80% over. 80% over if I get this data properly. VC per unit and total fixed cost. VC per unit. In VC per unit, commission is not included. Commission I'll see it later. Any doubts on this? Clear? Now let's look at the requirement. First is sale price to enable the management to realize a profit of 10% on sale proceeds in India. Selling price is to be fixed. And second is break even point. Let's put it in the format statement. Particulars per unit total. Particulars per unit and total. Listen for a minute. Whenever you do statement, listen for a minute. I am opening three columns. Some question I may open fourth, fifth, sixth, seventh, any number of columns depending on the number of rework. So what you should do is this three columns should occupy only half of your page, half or 50, 40% of your page. And if I tell you to open extra column, open one more column. If I tell you to open one more column, that is when you do an exam question, if you feel a need for another marginal costing statement, you will just add another column. Otherwise, you'll have to write the entire statement again. So to save time, again to save time, I may add a total rework 1, rework 2, rework 3. We may do 2, 3 rework. In case more is needed, obviously again we'll have to do the statement. So maximum you may do 4, 5 columns only. So that we can handle with doing rework extra column. So open 3 columns. I may need extra one more column. I may or may not need. I don't know. So as of now, open 3 columns. Particulars per unit total, sales, variable cost, contribution, fixed cost, profit. Please write it along with me. I'll tell you at some stage where I don't want you to write, but initial questions I want. How many units are there in the question? 40,000. They've asked me to calculate the selling price. So this is X and total is 40,000 X. Sales is X, per unit is X. Variable cost, listen, 9.98 and 0.08x. What is 0.08x? Is 8% of selling price. 8% of selling price. Commission is equal to 8% of the sale price. So 9.98 plus what? 0.08x. 9.98 plus 0.08x. Multiply this with 40,000. So 40,000 into 9.98. 399 200 plus 3200 x. What do you get if you subtract this? You have to subtract this and tell me what you get. Sorry? No, not 9.98 plus 0. You are right, but not that. Think again. Sorry? Yeah. 0.92x minus 9.98. 0.92x minus 9.98. These subtraction and all you'll have to take care properly because these are places where some mistakes happen, entire solution goes wrong. 0.92x minus, I'm basically subtracting this. I'm subtracting this in bracket, and this is 36,800x minus 399, 200. Clear? What's the fixed cost? How much? Subtract this and tell me. Please be a little cautious. Subtract and tell me this properly. Be a little cautious. 36,800x minus 4,92,000. 399, 200 is also minus. 92, 800 is also minus. Both are minus here. Both are minus. So please take care of these items properly. Again, this is a place when I did in my regular class, students made a mistake. They did 399, 200 plus 92, 800. They added the 92, 800 number there. Clear? Now listen, what is the profit they want? What is the question saying? 10% of the sale proceeds. So equal to 10% of 40,000 x. Solve x and let me know the answer. 10% of 40,000 x. I want a profit of 10% of sales. 10% of 40,000 x. Let me know what you get as x. This answers part 1 of the question. Part 1 of the question is fairly simple. We are done. Some question will say calculate the number of units to get a profit of 10% on sales. Number of units is x. Number of units will be x. Selling price will be given in the question. Selling price will be given in the question. Number of units will be x. One of them has to be x. Both cannot be x. So either the selling price is x or the number of units is x. Clear? Any doubts on this? Next, break even point is equal to BP in units is equal to fixed cost by contribution per unit. Fixed cost by contribution per unit. I will not again and again explain the formula. Formula keeps coming from that place. Fixed cost by contribution per unit. Be little cautious and tell me the answer here. Part 2 of the question. Read properly. Tell me what is contribution per unit. Fixed cost by contribution per unit. Fixed cost, you have already told me 90 to 800. Tell me what do you get as contribution per unit, and maybe you will make a mistake there also. Sorry, 2 point. 3.82. No, wrong. I'll tell you the mistake you guys would have made. Did you read this or not? Selling price is 14 per bottle. Don't work with 15 rupees and give me an answer, which is what in my class also student did. Now also you could have done that. Selling price is what? 14 per bottle. Selling price is 14 per bottle. So this is denominator is 14, 9.98 and 8% of 14. 8% of 14. Not, don't worry much about the mistakes which you make here, because anyway the amount of time I give you to read the question is also a little bit on the lower side. But okay, I want you to go through those mistakes process. 14 minus 9.98 minus 8% of 14. Now you divide, you'll get the answer in units. Multiply that with 14, you'll get the answer in rupees. Both are asked, units as well as rupees. Earlier answer which you got is of no use for part 2 of the problem. Small things like this only will keep changing in question. 32,000 units into 14 rupees will give you the BEP in rupees. Clear? Any doubts on this? Okay. PQR Limited has furnished the following data for the 2 years. Sales, PVR, MOS as percentage of total sales. There has been substantial savings in the fixed cost in the year 2012. Substantial savings in the fixed cost in the year 2012 due to the restructuring process. Company could maintain its sales quantity of 2011 in 2012 by reducing selling price. They've asked certain calculations for 2012. 2011 will not help you in any way, but still I want to do 2011 and 2012 together, because one data I'll use it from there. Only one data I'll use it from there, but otherwise it's of no much use. In this question, listen, my fixed cost when I calculate for 2011, I cannot copy paste for 2012 because there is a reduction. Second, there is a price reduction, which is why PVR is going down. PVR is going down. I'll have to somehow give effect to this. Again, we'll do a statement, particulars 2011, 2012, sales less variable contribution less fixed cost profit. I don't see need for more than 2 columns, but obviously you get into the practice that you occupy only half of the page. Balance half, in case needed, we'll open extra columns. Let's start. Particulars 2011, 2012. Okay. They have given sales, PVR, MOS as percentage of total sales. Somehow, let's close 2011 first, and then we'll close the 2012. Right, sales is 8 lakh. How much is contribution for 2011? 50%. 4 lakh contribution, 4 lakh variable cost. Clear? 50%. Tell me, how will I calculate profit? If you remember the equation, you will tell me the answer for profit. How will you calculate? Look at the equation, tell me the formula for profit there. MOS MOS into PVR. MOS into PVR. Now write MOS below this, right? MOS is equal to 3 lakh 20, 8 lakh into 40%. MOS is equal to 3 lakh 20. Profit is equal to MOS into PVR. MOS into PVR. MOS into PVR. What's the profit you get? 1 lakh 60,000. Fixed cost balancing figure 240. Yep. Now coming to 2012, sales question mark. PVR is 37.5. MOS is 21.875. There has been a substantial savings in fixed cost. So I cannot copy paste fixed cost. If I could copy paste fixed cost, my problem would have got over. But I cannot copy paste because there's a reduction. The company could maintain its quantity in 2011 in 2012 by reducing the selling price. By reducing the selling price. Now listen, it's a very important explanation. Last year, let's assume you have sold one unit, only one unit, and the price was 8 lakh. One unit, the price was 8 lakh. Variable cost one unit was 4 lakh. Contribution one unit was 4 lakh. This year, question has said you sold the same quantity. You sold the same quantity. The question is very clear. Say that you have sold the same quantity by doing what? By reducing the selling price. So I don't know. This is 1 into price. I don't know. Variable cost has to be 1 into 4 lakh because nothing is given. 1 into 4 lakh. 1 unit into 4 lakh because they have not told about any reduction in variable cost. They have not told about any reduction in variable cost. If there's any reduction in variable cost, in other words, total variable cost will remain same if quantity does not change and there is no change in cost structure. And there is no change in cost structure. So listen, 4 lakh is copy pasted as it is. 4 lakh is copy pasted as it is. I'll give you time to write. Listen for a minute. 4 lakh is copy pasted as it is. And the question says PVR is how much? So this is 37.5. This is 62.5. This is 100. This is 100. The variable cost ratio is changing, but variable cost as such is not changing. Why is the ratio changing? Because your denominator is going down. Your denominator is going down. What is the denominator? Sales. Sales is going down because what we did? We reduced the selling price. We reduced the selling price, but the overall quantity is remaining same. The overall quantity is remaining. This is tested as one concept MCQ in my book. So once you do that concept MCQ, this will get over. So 62.5 is equal to 4 lakh. Balance you write. Now write. Whatever explanation you want to write in your notebook, you write it and then tell me what is sales, what is contribution. Sales is 6 lakh. Contribution will go down to 2 lakh 40. Sales is 6 lakh 40. Contribution will go down to 2 lakh 40. Understand this very clearly. Why is sales going down? The sales is going down because of a reason of price reduction and not quantity reduction. Not quantity reduction. Clear? Any doubts on this? Can you apply MOS formula and tell me the profit now? Sales is 6 lakh 40. MOS is given in the question. Profit you can calculate. Equation. Just be. I keep telling in my class that you will have to play around the equation. You'll get every answer. 6 lakh 40 into 21.875%. MOS how much? 1 lakh. If MOS 1 lakh 40, profit is 1 lakh 40 into 37.5%. Sorry? That's our problem is over. 52, 500. So this is 52, 500. Fixed cost balancing figure 187, 500. Beyond this, I don't have anything to explain. One purposes statement should be very clear. Statement should be very clear, and understanding is very very clear that the question has said same quantity would be maintained. The same question could have said the same quantity will be maintained and variable cost will go down by 10%. If they had said that 1 into 4 lakh would have now become 1 into 3 lakh 60. 1 into 3 lakh 60. Any see the total variable cost changes because of two reasons. One is change in the total units. Second is the change in the cost structure. In this question, there's no change in the units, there's no change in the cost structure. So overall 4 lakh remains same. Overall 4 lakh remain same. Any doubts on this? Clear? They've asked for sales, which we have done. Fixed cost, we have done. Break even point is 6 lakh 40 minus margin of safety 1 lakh 40. 6 lakh 40 minus margin of safety, or you apply the formula fixed cost by PVR. Both will give you the same answer, whichever way you do. There are multiple way of getting to the answer. That's the only challenge. Multiple ways are there. You decide which way you want to use. Clear? Okay. Okay, let's do now an MCQ based question so that you get a comfort saying that MCQ is not different. Let's do question 4. A meeting of the heads of the department of Arnav Limited has been called to review the operating performance of the company in the last financial year. Head of the production department appraised that during the last year, company could operate at 70% capacity level, but in the coming year, 95% capacity can be achieved. 70% capacity, if they don't give me any units, 100% capacity is 100 units. 100% capacity is if they don't give units. So 70% is 70 units, 95% is 95 units. If at all needed, we'll see that. Can be achieved if you do a capital expenditure of how much? 100 crores. Head of the finance department has presented that during the last year, PV ratio is 40%, margin of safety and break even is 50 crore and 200 crore respectively. When you read this line at this stage, your mind should have told you 50 crore into 40% is fixed cost. 200 crore into 40% is, sorry, 50 crore into 40% is profit, and the balance is the fixed cost part. The balance is the fixed cost part. Every line you read, somewhere you'll have to absorb that. So 50 crore into the PVR, 50 crore into the PVR, that is margin of safety into the PVR is the profit, break even into the PVR is the fixed cost. To the reply to the proposal of increasing the production level, head of finance has informed that this could be achieved if selling price and variable cost are reduced by what? 8% and 5% of sales respectively. Fixed cost will also increase by 20 crore due to increased depreciation. Additional capital will be arranged at a cost of 15% per annum from a bank. In the coming financial year, it has been aimed to achieve an additional profit of what? 10 crore over and above the last year's profit after adjusting the interest. Interest also I have to pay. Following points are needed. What will be the revised sales for the coming financial year? What is the revised BEP for the coming financial year? Revised margin of safety for the financial year? Profit for the last year and the coming year? Total cost of the last year and the coming year. Now, when I read this fully, tell me in this question, where is it an MCQ based question or what is different? We have been doing so many questions. It is something like that only. Last question which you did was also like an MCQ based question only. If I had given you four choices, if I had given you four choices, it would have become like what? An MCQ based question. In this question, it is again like an MCQ based question only. Again like a MCQ based question only, because what has happened here, they have indirectly given you five questions with four MCQs. The problems which we did earlier, the four options were not there. The options were not there. With the option, it becomes more easy for me. It becomes kind of easier for me to do. Let's do particulars. Marginal costing statement. I'll do a statement. Statement will give me most of the answer. Let's do a statement. Once statement is done, we'll look at what are the requirements of the question. Particulars. calculation last year, calculation next year, right? Sales less variable cost, contribution less fixed cost, profit. Write the format and then keep it ready. We will then try to fill this fully, and then the question will almost get over. Okay. Last year data is almost available. Sales is 50 plus 200. Break even plus margin of safety. Break even plus the margin of safety. So 50 plus 200, 250 crore is the last year sales. 50 plus 200, 250. Your break even sales plus the margin of safety sales, both put together 250. What is the PV ratio of the last year? PV ratio is 40%. So 40% means variable cost is 60%. So 250 into 60%, 250 into 40%. Clear? The fixed cost number the question has mentioned is break even is 200 crore, margin of safety is 50 crore. Break even is 200. So break even point into PV ratio. Break even point into PV ratio. So 200 into 40%. Clear? Now coming to the requirements, the question has said that I want certain increase in profit. In the coming financial year, it has been aimed to achieve an additional profit of 10 crore over and above the last year's profit after adjusting the interest cost on additional capital. Last year I had my fixed cost, that is also going to change. Why it is going to change? Because there are certain requirements. They've said fixed cost will also increase by 20 crores due to increased depreciation on additional assets. Additional capital will also be arranged at a cost of 15% per annum from the bank. It will be arranged at 15% per annum from the bank, and I also need an additional profit of 10 crore over and above the last year's profit. 10 crore over and above the last year's profit. So last year's profit at 10 crore. Fixed cost will go up, contribution will come, and from contribution I'll come to sales. When I come to sales, there is a need for an assumption. Because MCQ, I'll know which assumption to take. That is the beauty about MCQ. MCQ will ensure which assumption should I take, because assumption can change my answer. Assumption can change my answer. That is the good part about the MCQ type of question. What is that assumption? I'll explain as we proceed. Now, right here, 20 plus 10, 30 crore. 20 plus 10, 30 crore. 80 plus extra 20 crore depreciation. And there is some interest cost. Interest will come at a rate of 15% per annum from bank. The loan will come at a rate of what? 15% per annum from the bank, and I am going to take a loan of 100 crore. I'm going to take a loan of 100 crore. Any doubts on this? Take a loan of 100 crore. So this is okay. Now comes my assumption because the wordings are slightly different, and that is where an assumption is needed. And I know what assumption ICA has taken. I'll tell you that also. See, last year it said this could be achieved the selling price and variable cost are reduced by 8% and 5% of sales. That of sales is a very important word. Why this becomes important? Listen, if that of sales was not there last year, 100, variable cost was 60, contribution was 40. Now 100 will become 92. 100 will become 92. 60 will go down by 5%. 60 will go down by 5%. What is that number? 57. You get 35. Can you tell me 35 by 92 is what? What percentage? 38 point? Okay, 38 point some number. Now listen, the important word here. It said variable cost is reduced by, selling price will reduce by 8%. Variable cost are reduced by 5% of sales. 5% of sales means variable cost ratio will go down. Variable cost ratio will go down by 5%, which means PVR will go up by 5%. Which means PVR will go up by 5%. No need to do 100, no need to do 60, no need to do 40, no need to do 92, no need to do 57. Very simple. Variable cost will be reduced by 5% of sales. That of sales word is very, very critical. If the of sales word was not there, if the word of sales was not there, then 100 would have become 92, 60 would have become 57, 40 would have become 35, and you would have calculated the ratio. You would have calculated the new ratio. Now what has happened is, because the word of sales is there, because the word of sales is there, what we are required to do is, we are going to say variable cost ratio will go down by 5%, which means PV ratio will go up by 5%. PV ratio will go up by 5%. Clear? Any doubts on this? Variable cost ratio goes down by 5%. PV ratio will go up by 5%, which means this is 55. This is, sorry, this is 45. This is 55, and this is 100 now. This is 100 now. Earlier PV ratio was what? 40%. Variable cost ratio was 60%. 60 goes down to 55. 60 goes down to 55 because of the word of sales. I've picked those questions only where those small words make a difference. Because of the word of sales, you have to understand 60 becoming what? 55 and 40 becoming 45. Can I take the alternate answer? Logically speaking, alternate answer is also okay, but because it's MCQ, I don't have any worries because I know which assumption to take. Because some students, when I did it in the class regularly, there was a different problem without MCQ was there. So students told me 100 becoming 92, 60 becoming 57. That is possible. That is possible, but here I don't have that headache. I don't want to get into that confusion mode itself. Now tell me the sales and variable cost. Calculate and tell me the sales and variable cost. 145 by 45%. Minor adjustments here and there, if you pick it up properly, things will become very easy as far as this chapter is concerned. Any doubts on this? This is an MCQ based question. I'll tell you once this is done what you should do for MCQ. One more tip which I need to tell you. Done with this. Now let's look at the answers. What will be the revised sales you have calculated? Tell me the sales. 322.22. Please calculate break even point, fixed cost by PVR. In your notebook, you have fixed cost, you have PVR. Fixed cost by PVR. For the coming year, fixed cost by PVR. What's the answer you get? 255 point. That minus 255.56 is margin of safety. Or you do profit by whatever way you want to do it. What's the answer for question number 3? In your notebook, tell me what is the profit of the last year and the coming year. 20 and 30. Total cost of the last year and the coming year. Add fixed and variable. Add fixed cost and variable of the last year and the coming year. 230 and that's all. This is what MCQ is all about. This is what MCQ is all about. Now, the same question, if I had solved without MCQ, I would have told that there are two possible answer, assumption one, assumption two, all that I would have told you. Now I didn't have that headache because I know the choices are there. I know the choices are there. So MCQ ensures that at least we are not bothered about the assumptions taking because assumptions changes answer. MCQ ideally scope for assumption should not be there, and if assumption is to be taken, you take assumption one, you don't get the answer. Change the assumption. Change the assumption. Every every case scenario based MCQ. First read this question 1, 2, 3, 4, 5, and then read the case study. And then read the case study. Why? Because when you read this, your mind knows what you want. So then when you read the case study, you will try to search for those information indirectly. Once that is done, then obviously you'll have to start answering. So again, I'm repeating, MCQ is not different. MCQ is not different. This question, when I solved, I didn't even look at the choice. I didn't look at the choice. I know what assumption ICA is taking. We solved it fully. After solving fully, we were looking at the answer. Good part is, in case you made some calculation mistake, at least that will get rectified here. Because if the answer is not there in the choices, if it comes in the choice, I can't help it. Well, you made a mistake and it's there in the choice, can't do much. But in case it's not there, at least you can then look at where did you make the mistake. Clear? Okay, I'll take maybe another 15 minutes break and then we resume. We'll take a break of 15 minutes. Okay, let's continue now. So, in the earlier segment of the session, I have started with the basics of marginal costing, where we have learned the various formulae which are there for marginal costing, starting with something called as the equation based approach, where BEP plus MOS is equal to total sales, and we link it with either PVR or contribution per unit. Let's do few more questions on the basics and then I introduce new concepts. Entire marginal costing will not get over today. Tomorrow also we'll have some part of marginal costing continuing. Let's come to question 5. Arnav Limited manufactures and sells its product R9. Following figures have been collected from cost records of last year for the product R9. Direct material, direct labor, factory overhead, AOH relating to production, selling and distribution overhead. Last year 5,000 units were sold. Break even sales, profit, MOS in percentage, profit if the sales were 10% less than actual sales. Requirements and all are very simple, not an issue, but I need two data point. VC per unit and total fixed cost. Without that, I can't solve the question. VC per unit and total fixed cost. In that, total fixed cost is available. The total fixed cost is total of this, but I also need VC per unit. Without these two data points in place, I cannot solve any question. Once that comes, break even sales is equal to fixed cost divided by contribution per unit, or if they have asked in rupees, I'll divide by PVR. Profit earned during last year, sales minus the variable cost minus the fixed cost, margin of safety in percentage. So profit, or I have my break even sales in part 1, MOS I get it in part 3, and I divide by the total sales. And profit if the sales were 10% less than the actual sales. Last year, this was 5,000 units. reduce 5,000 to 4,500 units and then do the statement again, or do it in the formula. Everything is okay. But first important part is fixed cost and VC per unit. VC per unit. In order to do that, I will have to go back to cost sheet chapter. I'll have to use the understanding of my cost sheet chapter, because I want to know what is COGS and what is COS. Without knowing what is COGS number and what is COS number, I'll not be able to do any kind of calculation here. So we are going to focus on calculating COGS and COS. What is COGS is this plus this plus this plus this. If you remember in your cost sheet format, direct material plus direct labor plus direct expenses prime cost, add factory overhead, you will get gross works cost. If you have opening or closing WIP, you get net works cost, then you get COP, then you get COGS. Here they've used the word AOH relating to production. AOH relating to production. So first let's get COGS, COS. Once that is done, I will calculate VC per unit and total fixed cost. To me, the problem ends there. To me, the problem ends there. I can do all the calculations which are needed. So I don't want you to solve this question. When I tell you to solve, you solve it. First, COGS is equal to. Can you tell me the total of all of this? What percentage? COGS is equal to first five line items. 0.57 COGS and the first five line items fixed cost total. Please solve and tell me the COGS number. COGS is equal to 0.57 COGS plus 3 lakh 1000 plus 3 lakh 1000. 7 COGS is done. In this 57% is variable. Balance 3 lakh 1000 is fixed. But I also have one more item, selling and distribution overhead. COS is equal to COGS plus selling overhead plus selling overhead. This is not an adjustment related to marginal costing. It's an adjustment related to your cost sheet chapter. Students again struggled because they saw something new here, but it's not new. It is just the cost sheet understanding. So COS is equal to 7 lakh 0.04 COS plus 68,000. Tell me the COS number. Sorry, 8 lakh. So my fixed cost is 3 lakh 69. Balance is variable cost from that 8 lakh. Balance is variable cost from the 8 lakh. Fixed cost number is 3 lakh 69,000. Variable cost is 431 R. 431 I don't like. I don't like the number of 431. Divide by 5,000 units. Divide by 5,000 units are what? Now, at this stage, I give you 5 minutes. I want you to answer those four requirements. Break even sales in rupees. What is break even sales in rupees? You know, fixed cost divided by PVR, profit earned during the year, sales less variable cost less fixed cost, margin of safety in percentage, sales minus the break even sales, you get MOS, divide that by the sales, you'll get percentage. Profit if sales was 10% less. Profit if sales was 10% less is instead of 5,000 units, now 4,500 units. Instead of 5,000, now you'll have to do what? 4,500. I'm giving you 5 minutes, start doing it. Please start doing it. 5 minutes time. Please start doing 5 minutes time. I think we spent around 7-8 minutes for you to do. But see, I wanted you have that experience. Break even sales is I have my 195 is the selling price. Variable cost is 86.2. So 195 minus 86.2 will give me the contribution per unit. Fixed cost number was 3 lakh 69,000. If you divide by this, you get BEP in units. You can multiply this with selling price or you calculate PV ratio. You'll get the same answer. Rounding of differences will be there. This is the answer for break even point, 6 lakh 61 350 approximately. 661 350. Second requirement is, second requirement is profit earned. Profit is equal to 5,000 into 180, sorry, 195 minus 8 lakh. 8 lakh was fixed and variable put together. 8 lakh is fixed and variable put together. You get a profit of 1 lakh 75,000. MOS in rupees is 9 lakh 75 661 351, and they ask specifically in percentage. So this divided by 9 lakh 75, 32.17%, and profit with 10% less sales is simple formula: contribution minus fixed cost. Contribution is 4,500 into 108.8. 4,500 into 108.8. Fixed cost is 3 lakh 69,000. Fixed cost is 3 lakh 69,000. Or you calculate the sales, multiply with the PVR. If you had already calculated the PVR, multiply with the PVR. Some difference of rounding off will happen. Some difference of rounding off will be there. Any doubts on this? Any doubts on the question? Can we proceed? Yep. 55.7949% is the PVR. I worked with PVR in the solution. When I did it in the other way: 661, 351. Same answer. 175, 32.17, and profit is 1,20,600. Any doubts on this? Clear? Can we proceed? Let's come to 6. A company has incurred a fixed expense of 4 lakh 50, sales of 15 lakh, earned a profit of 3 lakh during the first half. In the second half, it suffered a loss of 1 lakh 50. Very limited information. Fixed expense 4 lakh 50, sales 15 lakh, profit is 3 lakh. In the second half, it suffered a loss of 1 lakh 50. So first half and second half is given. PVR, BEP, and MOS for the first half year. Sales volume for the second half year, assuming that selling price and fixed expenses have remained unchanged. BEP and margin of safety for the whole year. So particulars, first half, second half, and total. First half, second half, and total, and we'll try to get to this data. Let's do this. Let's do the statement. Do it along with me. Particulars, first half, second half, and total. Again, a lot of question goes with this format, but some question I'll do it without the format also. Particulars, first, second, and total. Let's capture whatever data is there. The company incurred a fixed expense of 4 lakh 50 for the first half. 4 lakh 50. Sales of 15 lakh. Profit of 3 lakh. See, my objective every question is to get the statement properly. Beyond that, whatever calculations we are doing, if you make a mistake there, that is the worst thing. Mistake in the statement at least understandable because you made some concept error. After that is just formula application. Second half they have given loss is 1 lakh 50. That's all. I think this is the only information. Now tell me, how do I fill this? First half, what should I do? Reverse work, contribution 7 lakh 50, variable cost balancing figure 7 lakh 50. Clear? Fixed cost name 450, contribution 3 lakh. Contribution is 3 lakh. What is the PVR in this case? Tell me, what is the PVR you are getting? Contribution by sales. First half you have no. What is the PVR for the first half? 50%. Same PVR will continue. PVR is 50%. Contribution by sales. 7 lakh 50 divided by 15 lakh into 100. So my PV ratio is 50% for the first half. Same 50% for the second half. Sales is 3 lakh by 50%. Variable cost is 3 lakh. I put a total. Now I'll look at what are the requirements in the question and start answering them. In this question, there's no change in cost structure, nothing has undergone a change. Clear? Any doubts on this? Now let's look at the requirement. PV ratio, you'll have to keep telling me the answer. PV ratio is 50%. Tell me the break even point for the first half year. Calculate BEP for the first half year. You have data in your notebook. BEP for the first half year. Fixed cost divided by PV ratio, 4 lakh 50 divided by 50%, 9 lakh. What is the margin of safety for the first half? Total sales minus break even sales. This is for the first half year. Expected sales volume for the second half year, assuming that selling price and fixed expense remain unchanged. Doesn't matter, I've already got the second half year sales value. I've already got, and I had assumed this only. Selling price is not changing, fixed expenses is not changing. What was the second year sales? Second half year sales. Then BEP for the whole year. Please use the whole year fixed cost and tell me the BEP. Whole year fixed cost and tell me the BEP. 18 lakh. Whole year margin of safety balancing figure. Whole year margin of safety is balancing figure. Clear? It's a very simple area as long as you're able to understand the concepts properly. You will have to keep moving to the different concepts and you will be in a position to handle the question. Any doubts on this? I have one more question on the basics, then I'll be moving to different category. Before I read this question, let me look at the requirement because this is a MCQ based questions. Okay, question wants us to calculate contribution margin per unit. Can't be a very simpler question then. They just want us to calculate what is the contribution per unit. That's first requirement. Break even point in revenue. Revenue means in rupees. Second requirement. Achieve a target profit of 5 lakh. What should be the sales volume in sales to achieve desired profit? Desired profit plus fixed cost by contribution per unit. What will be the impact on the BEP if the variable cost per unit increases? If VC per unit increases, your contribution per unit will go down and BEP will go up. BEP will go up. So how much is the impact they're asking? How much is the impact? Then calculate the margin of safety in percentage. In percentage, if the company sells 4,000 units, if the VC per unit increases by what? 10%. This is not a new question. In this question, fourth question, you will calculate break even point with a 10% increase. Balance is the margin of safety. Balance is the margin of safety. These are 5 requirements of the question. First, you have to calculate contribution margin. Second, you have to calculate BEP in revenue. Third, this is original part. Then there is some changes of 10% they have said. Company wants to achieve a profit of 5 lakh. All these are original scenario. All these are original scenario and then some 10% change. Now I'll go back and read the question and try to get to these data points. So my mind will now be very clear that somewhere I need these information. Let's read the question now. XYZ Manufacturing Private Limited is a prominent company in the electric appliances industry. I'm not reading it fully. I only, wherever some numerical data is there, 25 days a month. This could be the only useful data. Balance is more of just a story about the company. They said this is what the company is doing. Fixed cost per month, factory rent, depreciation, admin expense, salaries, 10 lakh. Number of units produced per month, 10,000. Last month, there was an additional special order of 2,000 units, which resulted in higher production. Selling price per unit is 1500. Raw material including copper, plastic and other material, including copper, plastic and other material. The per unit cost of copper is 80 more than the cost of plastic. This is where they played around in this question. Is 80 more than the cost of plastic, while the cost of other material is twice that of plastic. So copper is equal to plastic plus 80, other material is equal to plastic, other material is 2 times of plastic, and the total raw material cost is raw material cost is 210 more than the combined cost of copper and plastic. The total raw material cost is 210 more than the combined cost of copper and plastic. So let's look at this now. Raw material cost is copper, plastic plus other material, copper, plastic plus other material, which is 210 more than the cost of copper and plastic. It is 210 more than the cost of copper and plastic. The per unit cost of copper is 80 more than the cost of plastic, while the cost of other material is twice that of plastic, is twice that of. This is how these small things, if you're able to pick it up in exam, you'll be in a position to handle this, because this type of question I have never discussed in my regular class also, because this came suddenly in one, I think latest MTP somewhere they have asked. September 24 MTP, this question was there. So when I discussed it in my class, I did not discuss this. But now, is it a new concept or anything? No, it's not a new concept. You'll have to just read the lines properly and then write it. Per unit cost of copper is 80 more than the cost of plastic, while the cost of other metal is twice that of plastic, and the total raw material cost is 210 more than the combined cost of copper and plastic. In case nothing has gone wrong, I can say other material is 210. Other material is 210. Can you tell me what will be plastic now? Read it carefully, please. Please read it carefully. What will be plastic? 105. What will be copper? 185. 185 plus 105 plus 210. 185 plus 105 plus 210. How much? 5. This is my raw material cost. This is my raw material cost, which is what the most important adjustment was. Raw material cost is 500 rupees. My selling price given in the question is 1500. Any doubts on the raw material cost adjustment? Any doubts on the raw material cost adjustment? So C plus P is cancelled. C plus P in both the side got cancelled. So other material is 210. Plastic is, other material is, see, many a times, no, your mind is like this. This is not yours. 420 is an answer I have got. When I tried initial first time, I thought 420 will be the plastic cost. But read it carefully. Other material is equal to 2 times of plastic. What your mind has told, 2 times into 2 you do, and then you write the answer. Entire solution goes wrong. The only good part is, because it's MCQ, maybe you get stuck there itself. In the MCQ, you may get stuck also, saying that I'm not getting the answer. I'm getting a different answer because you have not interpreted it properly. Any doubts on this? Then it says, the labor cost is, labor hour rate is 100 per hour. The total labor hours used in the last month were 36,000 hours. Now listen, number of units produced per month is 10,000, but last month 10,000 units were not produced. Last month there was a special order of what? 2,000 units. So you have produced 12,000 units last month. 12,000 units are produced in the last month. They gave the data labor there, and suddenly here in bracket they mentioned what? 2,000 extra units were produced in the last month. What is the use of this? I can say labor is 3 hours per unit. Labor is 3 hours per unit. 3 into 100, 300. 3 into 100, 300. Raw material you said 500. Labor is 300. This is 100, this is 50, all put together I get 950. Contribution should be 550. Problem over. I'm not doing anything beyond this. I'm not doing anything beyond this. Crux is that if you get this, I think it should be 550. Yeah, 550 per unit. Beyond this, everything is formality. You know what needs to be done on break even point. You know what needs to be done for sales to achieve desired profit. And they've asked impact. Impact means how much is the new BEP, and then the margin of safety. Then the margin of safety. All this is fairly simple. But what happens is you're not getting this number of 550. You're not getting the number of 550, then obviously you will get stuck. You will get stuck if you don't get the number of 550. So important part is getting that number properly. I've been telling only two numbers: variable cost per unit, total fixed cost. Variable cost per unit in this example is 950. Fixed cost I did not discuss because it's directly given 10 lakh rupee. 10 lakh rupees is directly given, and fixed cost doesn't matter whether you produced more units, less units, it remains same. Whether you produce 2000 extra, 2000 less, doesn't really matter. Clear? Any doubts on this? Any doubts on the concept? Again, I'm repeating, very, very critical. Pay attention on total fixed cost and VC per unit. VC per unit. For practice, if you want, pick up the ICI question, or in marginal costing you can even pick up questions from my material and do it, because every question will not take more time. So there I will have initially the simpler questions and gradually the speed will pick up, that is the complexity will pick up. But there my material may have all put together I think some 70-80 questions, but the gradually the speed will pick up. So initial basic question, which could be some 20-25 questions, if you can do all of that fully, you will get full clarity as far as this area is concerned. Maybe 20-25 questions will be there. I have segregated my material into different subparts. So part 1 is done with this. Now I'll be moving to part 2 of the material, which is BEP for multiple product, which is the BEP for multiple product. So when you have multiple product, how do you calculate BEP is the concept I'm going to discuss, and then I keep doing the questions. So part 1 of marginal costing, if possible, do all questions for one time practice. If you have already gone with the classes, if you have comfort, then no need to do it. Only those 7 questions which we are doing, you'll have to repeat those 7 questions at home so that you get clarity on basics, clarity on the basics part. Now I go back to my concept book. Okay, so there are few more concepts which are there where I did not have a specific question. Some question will say that calculate the sales to be done to achieve a profit of 10% on sales, 20% on sales. You have to assume something as X to solve it. If problem is silent, units is X. If problem is silent, units is X. If problem specifically tells, then selling price is X. If problem specifically tells, selling price is X. Otherwise, what can change is the units. What can change is the units. So units you will do. Sales of the company may change based on selling price or units sold. Many question would ask us to fix a selling price or number of units to achieve a target profit. Like the first question we did, that the cool drinks example where they had told fix the selling price. I told selling price is X. However, in few question clarity will not be there. If problem is silent, it will be assumed that sales will change based on what? Units sold, based on units sold, and I'll assume units sold will be taken as X. One variant of break even point which sometimes ICA may ask is cash break even point. Nothing much changes. If they ask you cash break even point, in this question depreciation will not form part of fixed cost. Depreciation will not form part of fixed cost, and you calculate your cash break even point. So cash break even point, don't consider non-cash item in the fixed cost. Similarly, non-cash item in the variable cost, but variable cost you will not have non-cash item. Only this depreciation will come. Only the depreciation will come, which we have to ignore. Which we have to ignore while doing the calculations. Clear? Any doubts on this? Can you give me the answer to this? Very simple question. We have to calculate cash break-even point here. How much is the cash break-even point? 10,000, because the wording used is depreciation 15,000, other fixed cost 30,000. What I can also say is depreciation 15,000, total fixed cost 30,000, then remove the depreciation, then remove the depreciation. Clear? Any doubts in this? So here the word used is other fixed cost, other fixed cost. Basic thing is I wanted to explain the concept saying that for cash break-even point, depreciation is to be ignored. So to revise this at home, when you have to revise, you have to just read the 11 concepts which I've done till now. When you read the concept, the problem that concept is over. Practice questions are extra. So day before exam, concept book will be the most important thing for you to revise every concept which I have explained. Okay, I come to a next concept called indifference point. I thought I'll do multiple BP, but I think it is later. I'll do indifference point. I'll do the question around that, and then I'll keep moving around. Now, what is indifference point? Let's understand. I have a company where the employees have to travel. Now, for travel, I have to provide them accommodation. I have two choices for accommodation. One is hotel, second is guest house. Hotel and guest house are the two options available for me. When I tell them to stay in hotel, I have to pay 2,000 per day. Okay, hotel is sorry, let's take it as 5,000 per day. Hotel is 5,000 per day. Guest house, which is my own guest house, I incur only 1,000. I still incur some cost. Then there is a fixed cost. In hotel, I don't incur any fixed cost. But in my guest house, I have to incur 30,000 rupees. I have to incur 30,000 rupees as a fixed cost in my guest house. Now let's assume you're going to travel only for 2 days in a month. 2 days in a month. Is hotel better or guest house better if you travel only for 2 days in a month? Which is better for 2 days in a month? Only 2 days. Which one? Hotel will cost you 10,000. Guest house will cost you 32,000. How 32,000? 30,000 is fixed plus 1,000 into 2 plus 1,000 into 2. Okay. 2 days is over. Let's assume you're going to do 10 days. 10 days. Which is better? Tell me if it's 10 days. This is 50,000. This is. Can you tell me at what level both will have same cost? That's called indifference point. At what level both will have same cost according to you? Is there any way to find that? It's between 2 days and 10 days. 2 days, this is better. 10 days, the other one is better. Somewhere in between, both will give the same cost. Can you tell me what will be that time? Okay, there's a formula for that. The formula is very simple. Change in fixed cost, 30,000 divided by change in variable cost. This is called indifference point. Change in fixed cost divided by change in variable cost, 7.5 days, which is technically not possible. But if you take 7.5 days and do the calculation, both will give you the same cost. 7.5 days, both will give you the same cost. This is what indifference point is all about. Unless you understand what is concept, I am not sure how will you apply it. The difficult part is people don't know what is indifference point and they're trying to solve a question around that. I can't help it. So now, how is it useful? I gave you example of hotel and guest house. Like this, I have method 1, method 2 to produce, machine 1, machine 2 for production. So I can have different options like this. So in that option, I want to know is machine 1 better or machine 2 better. So how will I find this? By calculating indifference point. Formula is change in fixed cost. Numerator is okay. Denominator can see change in variable cost per unit or contribution per unit. In hotel example, I could not tell you contribution because it's only expenses. But when I do machinery, I'll be earning in machine 1, machine 2, where I earn more. So change in VC per unit or contribution per unit or VCR or PVR. VCR or PVR. If you divide by change in VCR, you get answer in rupees. If you divide by change in VC per unit, you get the answer in units. Very simple formula. Change in fixed cost divide by either change in variable cost or change in contribution. Both will be same. Or change in variable cost ratio or PV ratio. Change in variable cost ratio or PV ratio. Clear? Any doubts on this? Indifference point is the level of production at which two alternatives will give same profit or same cost. Alternative with lower fixed cost. Alternative with lower fixed cost will be better below indifference point. Lower variable cost will be better. I'll explain this line in a minute. Change in fixed cost divided by what? Change in variable cost per unit or contribution per unit or PVR or VCR or PVR or VCR. I have given you the logical construct here by giving you an example of 2 days, 10 days, and in between 7.5 days. Now, what questions will also tell you is if your indifference point is, let's assume, 12 days, below 12 days, one option is better. Above 12 days, the other option will be better because sometimes you told me hotel, sometimes you told me guest house. Whenever I am having lesser volume, whenever I'm having lesser volume, I want to save on fixed cost. Whenever I have lesser volume, if I'm going to travel only for 1 day in a month, I'm least bothered about fixed cost. I don't want any fixed cost. I don't want any fixed cost. I'm okay to pay extra variable cost. I'm okay to pay extra. Hotel guy is saying 5,000 per day. Okay, okay. Let's not incur fixed cost. Let's not incur fixed cost. So when volumes are less, I take low fixed cost, okay to pay higher variable cost, okay to pay higher variable cost. And when volumes go up, so for example, assuming for this classes we had two options. If students are less, then I'll say I want to pay per student rent. If students are more, I want to pay fixed 5,000 rent, 10,000 rent because when volumes go up, I am okay to incur fixed cost, but save on what? Variable cost. So this is what the concept says. With lower fixed cost will be better. With lower fixed cost will be better when what? Below indifference point. And when you go above indifference point, you will have higher fixed costs are technically lower. Both can't be low. Both. It can't be that fixed cost is lowest, variable cost is lowest. Then there's no choice. Go ahead and select that. Go ahead and if both are lowest, then there's no indifference point concept. If somebody tells me guest house no fixed cost and variable cost only 1,000 rupees, why will I choose hotel? I'll not choose the hotel. Guest house is okay because I don't incur any fixed cost. Clear? Any doubts on the concept here? Any doubts on the concept of indifference point? This example when you do at home itself you'll understand. But okay, let me do a question. This is part 3 of my chapter. Every part I have done, I think some 11, 12 parts in marginal costing. Ideally, I should have completed part 2 and come to part 3, but okay, the questions were like this. Let's discuss this now. Indifference point. A company has a project to install a new machine exclusively for the manufacture of a new product, which is expected to have good demand, reasonably high margin. Maximum possible annual sales may not exceed 50 lakh rupees, and if there is a competition, it may fall considerably. Company has got quotations for two machines. Details are available. Model X, Model Y. Possible sales, fixed cost, and profit. They are asking us to calculate break even sales, sales at which both model will give same profit or same fixed, same cost basically means indifference point. Indifference point, range of sales over which one model is better than the other. That is below indifference point, one model is better, above indifference point, the other model is better. We're going to put this in marginal costing format. When I put it in the marginal costing format, I'll get the PVR. I'll get the PVR. My formula is change in fixed cost by change in PVR. Change in fixed cost by change in PVR. And for break even sales, I'm going to use a formula fixed cost divided by PVR. Fixed cost divided by PVR. Let's put it in the format. Particulars, model X, model Y. Model X, model Y. Write the format. Sales less variable cost, contribution less fixed cost, profit. Okay, let's write the numbers, whatever they've given. Sales is 50 lakhs for both. Fixed cost is given. X has 5 lakh, Y is 8 lakh. If a model has higher fixed cost, it will technically have lower variable cost. It has to have lower variable cost. Profit is 15 lakh, 17 lakh. 15 lakh and 17 lakh. Reverse work and I will kind of get to the answer. Contribution, you get it. Variable cost is balancing figure. Clear? Now they've asked for break-even point. Break-even point is fixed cost by PVR and sales at which both model will give the same profit. That's technically called as your indifference point, which is change in fixed cost divided by change in PVR or VCR, whichever way you do it. Below this, write PVR. PVR. Calculate the PV ratio and tell me. 40% and 50%. Do BEP then. Fixed cost by PVR. Fixed cost by PVR. Yep. Okay. Now the requirements are range of sales at which both model will give same profit. Right. Indifference point is equal to change in fixed cost by change in PVR. Change in fixed cost by change in PVR, or you can even say change in fixed cost by change in VCR. Tell me the difference in fixed cost. 3 lakh. Difference in PVR 3 lakh by 10%. I'm not doing 30 lakh calculation, but if I do 30 lakh, both will give same profit. Both will give same profit. That's technically called indifference point. At 30 lakh, contribution for the first one will be 12 lakh, second one will be 15 lakh, less fixed cost, both will give same profit. Any doubts on this? The last requirement is range of sales over which one model is better than other. Now, as I said, listen, at 30 X or Y, at 30 X or Y, both are okay. You choose X or Y, that's your wish. 30 to 50, that's the outer limit. 50 is the outer limit. Above indifference point, that is when you go beyond indifference point, low variable cost or high fixed cost. Low variable cost. Which model is better? Model Y in bracket low variable cost. Model Y in bracket what? Low variable cost. Understand the concept very clearly. When sales go up, I want to save on variable cost. I want to save on variable cost. When sales is less, I want to save on what? Fixed cost. I want to save on fixed cost, which is, and if you see in this table at 50 lakh, Y is giving more profit. At 50 lakh, Y is giving more profit. 17 lakh profit. Y is giving more profit, which is 17 lakh. So below indifference point, low fixed cost is preferred. Above indifference point, low variable cost is preferred. One check, please listen. This is not 0 to 30. This is 12.5 to 30 and 0 to 12.5. What is 12.5? I'll explain. Neither X nor Y. Because 12 lakh 50 only I achieve break even. I achieve break even only at 12 lakh 50. So till 12 lakh 50, don't introduce the product. If somebody is going to sales is 10 lakh rupees only, neither X nor Y. I'm not bothered about the 16 lakh because X is broken even. I just want one machine to break even. I want one machine to break even. So 0 to 12 lakh 50 answer is what? Neither X nor Y. 12 lakh 50 to 30 lakh X is good. At 30 lakh anything is fine. 30 to 50 Y is good. 30 to 50 Y is good. Able to understand this? This is the concept of indifference point. This is the concept of indifference point. Any doubts on this? I'll go back to the concept book. So I have handled this concept which is on an area called as indifference point. In my book, there is one more question where you have three models. That is model 1, model 2, model 3. If you have three models, indifference point can be calculated only between two models. So you will get an answer between model 1 and model 2. Then another answer between model 1 and model 3. Another answer between model 2 and model 3. One exam they gave four models. Then you will get an answer between 1 and 2, 1 and 3, 1 and 4, 2 and 3, 2 and 4, 3 and 4. Like this, if you increase the number of options, you will keep getting number of different answer. Indifference point can only be calculated between two approaches. That is two machines. Two machines, two models, two approaches, whatever you say. But I can calculate only between two. I cannot calculate between 3, 4, 5 and also. Then what to do? If you give me five options, then 1 and 2 is one calculation, 1 and 3 is second calculation, 1 and 4 is third calculation. They will not ask this, but one MCQ they ask that if there are four alternatives, how many indifference points can be calculated? They ask that in an MCQ, giving four options, saying that can you calculate two indifference point, three indifference point, 5, 10, something like that. So that can come in exam, but they may not give you five options and tell you to calculate all indifference point. But yes, three machines can come. And is this a different? This is also there in your FM. In FM, we have a concept called indifference point there also, and there also you'll be having plan A, plan B, plan C, plan D, something like that. Between plan A and plan B, plan A and plan C, plan A and plan D, something like that is there. Even in financial management, same concept is there in marginal costing. Clear? Any doubts on this? Any doubts on the concept? Now I come to the next concept, which is BEP for multiple products. Small concepts I will do. I'll do a relevant question so that, because it's a very lengthy area, because it's a lengthy area, I cannot cover it even fully today. So I'm trying to break it down into multiple concepts. So what is multiple product is? Let's assume I'm selling product A, product B. Two products I'm selling. A, I earn 10 rupees per unit. B, I earn 20 per unit. A, PVR is 40%. B, PVR is 60%. Now you told me calculate break even point. No problem with that. I asked you formula. You told me fixed cost by PV ratio. Now the headache. Should I take 40%, 60%? Because I have two PV ratio. I have two PV ratio. Then I asked you, no, don't do that. Do BEP by contribution per unit. Again, you gave me two answers, 10 and 20. So you will get stuck. You will get stuck. So what should we do in this situation is what we are going to see in this concept. When you have two products, how are we going to calculate break even point? Now, one option is they'll give you some sales mix, saying that 2 is to 1, 3 is to 1, 1 is to 1, 4 is to 1, some ratio they'll give. So I'll use that ratio and I'll say 10 and 20 together has become some number. 10 and 20 together has become some number. Let's assume the ratio is 1 is to 3. 1 is to 3. So what I will do for problem solving is I don't sell A, I don't sell B, I sell a product called AB. This is just to solve the question. This is just to solve the question. I sell a product called what? AB. What is AB earning? 10 into 1 rupees plus 20 into 3 rupees. 10 into 1 rupee plus 20 into 3 rupees. So AB is earning 80. AB is earning 80. So when I ask you formula, I'll say break even point is equal to fixed cost by contribution per set divided by what? Contribution per set. What is set? A combination of A and B. Combination of A and B. Sometimes they will give the sales mix for units. Sales mix for units. If they give mix for units, you do this fixed cost by contribution per set. Example, one set contains the mix given in the question. A company sells A, B and C in the ratio of what? 4 is to 3 is to 2. Contribution is 20, 15, and 10. I don't understand 20. I don't understand 15. I don't understand 10. Then what do I understand? 20 into 4 plus 15 into 3 plus 10 into 2, and contribution per set is 145. Get the answer in number of set and then say A is so much, B is so much, C is so much. Then you say separately what is A, what is B, and what is C. If you are being given the sales mix for the units, if you are given the sales mix for the units, if they give you for value, if they give you for value, then you have to do a marginal costing statement for A, B, C, and a total column and a total column. So what will happen is something like this. Let's assume, for just for imaginary sake, this is A, this is B. I'll put a total. When I put a total, sales will get added up, variable cost will get added up, contribution will get added up. Total contribution by total sales will give me composite PVR, will give me something called as composite PVR. What is composite PVR? Is PVR of the two products put together, PVR of the two products together. And using that composite PVR, one PVR, you will get the answer. Using one PVR, you will get the answer. You'll understand when I do an example, but this is the concept. When you have multiple products, you cannot directly apply it because formula is known to us. What is formula? BEP by contribution per unit. I asked you contribution per unit, you are saying 20, 15, 10. I asked you PVR 30, 40, 60. Then I have to do composite PVR. I'll have to do a composite PVR, and using composite PVR, we'll do the calculation. Clear? Any doubts till this? Any doubts on the concept? Let me see if I have a question around this. Let's come to 8. MK Limited manufactures and sells a single product X whose selling price is 40, variable cost is 14, uh, variable cost is 16 per unit. If the fixed cost is 4 lakh 80, annual sales is 60% margin of safety. Calculate the rate of return on sales, assuming an income tax level of 40%. I'm not doing the first part. You'll have to do a marginal costing statement. When you do a marginal costing statement, you'll get answer to this. This is part one. We are not discussing that. This and the second question has no linkage. Second question is multiple product. Second question is where the multiple product will come. For the next year, it is proposed to add another product line Y, whose selling price will be 50, variable cost will be 10, fixed cost is 6,66,600. Sales mix value of X and Y would be 7 is to 3. Determine at what level of sales next year would MK Limited break even. At what level of sales would MK Limited break even? Give separately for both X and Y the BEP in rupees as well as the quantity. BEP in rupees as well as the quantity. Now listen. First thing you have to understand is this 7 is to 3. Is it for units or is it for value? Both are different. Both are different. When it is units, then you are selling 70 units, 30 units. When it is value, you are selling 700 rupees, 300 rupees. 700 would mean 700 divided by 14, 17.5 units. And 300 would mean 300 divided by 50, only 6 units. 300 divided by 50. I'll repeat again that 7 is to 3 mix can be for units, can also be for value. If it is for units, I have a different approach. If it's for value, I have a different approach. The word used is sales mix values, the sales mix value. So I assume it is for value, but first I'll give you answer if it is for units, what happens. Then I'll give an answer if it is for value. I'll do it, you need not do it because your focus will be on only writing it. Rather than writing it, I want you to understand the switch on the AC. So I'll now first explain what happens if it's in units, what happens if it is in units. Tell me what is the contribution per unit of X. Simple questions you'll have to answer first. Contribution per unit of X. Contribution per unit X X X. First para 24. Contribution per unit of Y. Clear? This is 7. This is 3. 7 is to 3 is the mix. Now what we are saying is, let us assume one set contains 7 units of x, 3 units of y. So this is x, this is y, 7 units of x, 3 units of y jumbled together. Jumbled together. So contribution per set is equal to 7 into 7 into 24 plus 3 into 40. 7 into 24 plus 3 into 40. What's the answer you get? 280. And BEP is equal to 6,66,600 by 288. 6,66,600 divided by 288. 2000 point 5. This into 7 and into 3 is the BEP of x and y. Into 7, y into 7, y into 3 is, our assumption initially was one set has 7 units of x and 3 units of y. That was our initial assumption. One set has what? 7 units of x and 3 units of y. So into 7 into 3 and we are done. That will give me in units. Multiply with selling price, you will get the answer in rupees. This is one way of doing it. This is one way of doing. If you assume 7 is to 3 is for units, 7 is to 3 is for units. I'll repeat again. I calculated 288. I calculated 288. One set contains 7 units of x and 3 units of y, and then divided by 288. I got the BEP in set. Into 7 is answer for x, into 3 is answer for y, into its selling price is BEP in rupees, into the selling price is BEP in rupees. Clear? Any doubts on this? Second approach is, because the word used is value, first product has a PVR of 60%. First product has a PVR of 60%. 40 variable cost is 16. Variable cost is 16. Second product has a PVR of 80%. Has a PVR of 80%. How 80%? Selling price is 50, variable cost is 10. You know PVR and all. It is 60, it is 80. Now what is composite PVR is? 60% into 7 and 80% into 3. 80% into 3 whole divided by 10. Whole divided by 10. Point 666. So 66% is the PVR, and with that we will work. 66% is the PVR. Using that 66%, you will get the overall sales. That has to be divided in the ratio of 7 is to 3. That has to be divided in the ratio of 7 is to 3. Here, not divided in the ratio of 7 is to 3. Multiplied with 7 and multiplied with 3. Multiplied with 7 and multiplied with 3. Because assumption is one set has 7 units of x and 3 units of y. And here we have already divided by 10 here. We have already divided by 10 here. So now I have to split in the ratio of 7 is to 3. Clear? Any doubts on this? Any doubts on this? So if you see the answer, okay, this they have answered on, it is assumed that the given sales is for units sold. Assumption is given is for units sold. It can be for units sold. It can be for value. I thought it is value was the word used there. But okay, this is ICI answer. Units sold. So 7 is to 3 mix you do 288. 16202 6944 into its selling price, into its selling price. And when it is in value, you get composite PVR. Get the overall answer. Get the overall answer. What is overall answer is? Can you tell me 6,66,600 divided by 66% is what? 666,600 divided by 66%. 10 lakh. Split this in the ratio of 7 is to 3. X is separate, Y is separate. 7,07,000. Divide this by selling price, you will get the in units. Divide that by selling price, you will get it in units. I feel this is more better answer. because the word used was value. I don't know why ICI did this, but okay. There are two approaches. You need to understand only there are two approaches. One approach is what, doing the calculation in units. Second approach is doing the calculation in value. Both approach will give a different answer. Okay. Here you got 7, 7 and 3, 3. Here you got 648 and 347. 648 and 347. Both approach will give different answer. Both the approach will give different answer. Any doubts on the concept? I'll repeat again. I'm not sure how many of you would have, because you would have done these concepts earlier, but at that time, how much focus you would have done on this concept, I'm not sure. So BEP, when you have multiple products, there are two scenarios. One is on the units, second is on the rupees. When it is in the units, BEP in units is equal to fixed cost by contribution per set and then multiply with the respective answer. And when you are doing in rupees, you will get a composite PVR. Composite PVR is total contribution by total sales. To solve this question, you could have said selling sales is 100 rupees, 70, 30, and done the question, same answer you will get. You will end up getting the same answer. Get the overall PVR, and after the overall PVR is done, get the overall break-even point and split in the ratio of 7 is to 3. Split in the ratio of 7 is to 3. In order to check your understanding, you just need to do this MCQ which is there, just to check your understanding on this concept. I think I may have two, yeah, 3 MCQs are there, and that will kind of take care. That will take care for you to solve this question. Clear? Any doubts on this? So I'll repeat again. When you have multiple products, formula has a challenge. The challenge I get is the formula says break even point, and this is not only for break even point. I should have told this. This is not for break even point. This is also for MOS. This is also for sales to achieve desired profit. Because what is the formula for sales to achieve desired profit? Sales to achieve desired profit is desired profit plus fixed cost by contribution per set or composite PVR. Contribution per set or composite PVR. Margin of safety is equal to profit by contribution per set or composite PVR. This concept ICI tested in budgets and budgetary control. For sales budget, they didn't give the units. They told you to apply the formula of contribution per set. They wanted the students to apply this formula of contribution per set there. Clear? Any doubts on this? Any doubts on this? An extension of this is something called as plant merger. An extension of this is something called as plant merger, which also ICI has tested few times in exam. I'll explain this first. I have plant A, I have plant B. Both will merge and become total. Both will become merge and become total. All this are there in your ICI SM. I'm not sure how many of you have focused on these type of questions. So that's why I've done bifurcation. If you see here, your marginal costing has so many things. Basic marginal costing with changes in variable we have done. Concept of composite PVR, contribution per set I've just now explained. Fixing selling price, finding sales volume to achieve target profit margin. Initial basic questions we have done. Fixing selling price to achieve target BEP. You will see maybe one question later. Cash BEP I have explained. Plant merger is what I am at now. Plant merger. MOS computation you have done. This we have done. Indifference point we have done. But so like this, you will have to see BEP with multiple fixed costs, multiple variable costs. What are all this? You'll understand as we proceed. But there are lots and lots of concepts there. Read the concept book clearly. Read the concept book clearly. I'm now reaching the 14th concept. Like that, every chapter has some concept. 150 pages. In that, if you remove the MCQ, it's only 50 pages. If you remove the MCQ from there, it's only 50 pages. If you are thorough with those 50 pages, entire costing will be very easy for you. But if you're not thorough with those 50 pages, then it becomes difficult for you to handle the question. So I'll come to plant merger now. Now, plant merger, only simple thing is, I have plant A, plant B. Plant A, 800 sales, 200 profit, 20% PVR. Plant B, 200 sales, 40%, some PVR of 25%, something is there. Some numbers are there. You're going to merge them together. When you merge them together, you have to prepare a total column. Only one thing you need to ensure is you have to add A and B, but you cannot add the number as it is. You cannot add the number as it is. Then what you need to do, you need to convert this statement for 100% capacity. You have to convert the statement for 100% capacity and then add the number. You'll get the total. Then the question will say, what is the break-even point of the merge plan? You have the data for the total. Say whatever formula for break-even point you'll have to apply it. But you will have to get the total. Total you should not add as it is. You should not add as it is. You'll have to convert to what? You'll have to convert to 100%. You'll have to convert to 100% and then add the numbers. Then add the numbers. In this situation, two manufacturing plants will merge together and operate as a single plant. Because of the merger, cost dynamics. What is cost dynamics? Is the cost structure will be the weighted average of the individual plant. A was efficient, B is inefficient. Together they will become slightly better, slightly weaker. B will become better, A will become weaker, and the weighted average will be there. Prepare individual statement at what? 100% capacity. At 100% capacity, add them. After that, you can calculate anything. The question can ask sales to achieve desired profit, profit at a desired sales level, break even point, margin of safety. Anything can be asked in the question. Anything can be asked in the question. Only thing is, you'll have to first add them together. You'll have to add them together. When you add them together, ensure that you add it at 100%. Ensure that you add it at 100%. Let's see it in a question now. Two manufacturing plants which have the following operating details decided to merge. What you will do is you will add these two. No, you cannot add these two. You will have to do a statement at what? 100% capacity. After doing that, they are asking what is break even sales of the merged plant. Look at the total level, apply the formula called fixed cost by PVR. Apply the formula of fixed cost by PVR. What is the capacity utilization? 100% you know the sales. Whatever break even you got accordingly. Profitability of the merged plant. Sales to achieve a profit of 75 lakh. Like that, you can ask any number of questions. Let's do this now, right? Particulars. You will need totally 6 columns. Particulars. Company Taylor 90%, 100%. Company won 60%, 100%, and total. Please open 6 columns. Particulars. Taylor 90, 100. Won 60, 100. 90 and 100, 60 and 100. Company Taylor 90%, 100%. Company won 60%, 100%, and total. This alone you will have to ensure. If you ensure this, this is sufficient. Let's write the numbers. Sales 540 is for 90. Tell me what is it for 100? 600. 300 is for 60. 500. Together is 1100. Together is 1100. 540 is for 90%. 600 is for 100%. 300 is for 60%. 500 is for 100%. Put together is 1100. Put together is 1100. Then variable cost. 396 is for 90%. 440. 225 is for 60%. Put together 440 plus 375. 81. Contribution. Subtract and tell me the numbers. 144, 160, 75, 125, and 285. Fixed cost 80, 80. Okay, this is the most important part. Fixed cost 80 will remain 80 only. Fixed cost 80 will remain 80 only. With capacity increase, fixed cost does not change. Fixed cost does not change. That alone you will have to take care. 50, 50, 130. Profit. Clear? Now, just the total column needs to be seen. Others, please ignore it. Other columns, please ignore it. Question is asking break even point using the total column will calculate PVR fixed. I'm not doing anything beyond this. Fixed cost by PVR. Fixed cost by PVR. You will get answer. Let's assume 800 lakhs. Let's assume 1100 is 100%. 800 is question mark. That is what is capacity utilization. That is the capacity utilization. Then profitability, if it's 80%, this statement was for 100%. Sales will become 80%. Contribution will become 80%. Fixed cost will remain same. Profit will go down. Profit will go down. Sales to achieve a desired profit of 75, desired profit plus fixed cost divided by the PVR using that 100% capacity. No Taylor, no one using the 100% capacity. It's not multiple products here. It's not multiple product. Why I've discussed it here is you'll have to add the two and then do the calculation. Clear? Any doubts on this? This is called plant merger. Under plant merger, what you need to do is you'll have to combine the plants at 100%. It's not 100% technically. It has to be common percentage. So common percentage, I feel 100 is better. So that's why we convert into 100 and then do it. Any doubts on this? Any doubts on this part? Even this examples which are there, even you do this example, you'll kind of be done with it. This MCQ itself is sufficient to understand the concept. Clear? Any doubts on this? Okay, I'll just do last one more concept and then end today's session, which is on shutdown point. I'll quickly cover this concept and then we are kind of done. After I'm done, what you need to do is you'll have to revise your entire activity based costing using the concept book and those 4 questions I have done. Extra questions possible, do it. Not possible, leave it. I would suggest if you can do some more questions of your ICA material. Marginal costing from my question bank, if you can do the initial set of questions and then later set of questions, what I do in this 130 questions which I've selected, that is sufficient, are your ICISM. Now coming to shutdown point, there are certain situations where the company faces a lot of financial difficulty because of some market related issue. Example, COVID. When COVID came in, a lot of companies were suffering because sales was not happening, production challenges were there, raw material availability were there. So at that time some companies will decide, can I temporarily shut down my operation? Can I temporarily shut down my operation? That analysis is called shutdown point. Now break even point is equal to fixed cost by PVR or contribution per unit divided by PVR or contribution per unit. This is on your break even point. This is as far as the break even point is concerned. The formula is fixed cost divided by contribution per unit. But now, when an organization is under so much pressure, they are saying, I want to shut it down. Issue is when you shut it down, also you may incur fixed cost. You may incur fixed cost. So that is why break even point is not the right analysis for temporary shutdown. I'm discussing about temporary shutdown. So what we analyze here is, let's assume if I operate, contribution is 1 lakh and fixed cost is 5 lakh, loss is 4 lakh. If you stop, contribution is 0. Fixed cost may continue at 5 lakh, may go down. I don't know, because when you're shutting it down, there is a possibility of fixed cost going down. Let's assume fixed cost goes down to 450. Losses, in this scenario, it is better to operate. It is better to operate. So the formula is not fixed cost by PVR. For shutdown point, the formula is unavoidable fixed cost. What is unavoidable fixed cost is in this 500, sorry, avoidable fixed cost. The formula is avoidable fixed cost. In this 500, 450 is of no use. 450 is of no use. By temporarily shutting it down, you will save how much? 50,000 rupees. Do I need to save that or not is what we are taking a call. So there is a formula which says fixed cost during operation minus fixed cost during shutdown, minus fixed cost during shutdown, minus the additional fixed cost to resume operation, divide by contribution per unit or PVR, divide by contribution per unit or PVR. If your sales is below shutdown point, please close the factory. Please temporarily close the factory. And if you are above shutdown point, continue operating. If you are above shutdown point, continue operating. Practically, this is just a financial analysis. Practically, I'll have to see what will happen to my employees, what will happen to my customer, what will happen to my goodwill and all. I may not shut it down and all. But theoretically, formula is this: fixed cost during operation minus the fixed cost during shutdown minus the additional fixed cost to resume operation. The gap is called avoidable fixed cost. The gap is called avoidable fixed cost. Logic is very simple. By doing my operations, if I can recover the avoidable fixed cost, let us continue operating. Let us continue operating. If you can at least earn that avoidable fixed cost, if you can earn that avoidable fixed cost, at least continue operation. You cannot even earn that, put a stop. If you cannot earn the avoidable fixed cost, what you need to put a stop. Clear? Any doubts in this? Any doubts in this part? Just give me a minute. Okay. Mr. X has 2 lakh investments in his business firm. He wants a 15% return on his money. From an analysis of recent cost figures, he finds that variable cost is 60%, fixed cost is 80,000. Please answer part 1 and 2. I'll take you through part 3. Answer part 1 and 2. You think and answer part 1 and 2. They are very simple. First one is break even point. Second is sales to get desired profit. You try it. I'll discuss. What is the break even point you get? 80,000. Second is I want a 15% return on investment, which means my profit is 15% of 2 lakh. Profit is 15% of 2 lakh. So 80,000 sales to achieve desired profit plus 30,000 divided by 40%. 80,000 plus 30,000 divided by 40%. Clear? Any doubts on this? Last part is Mr. X estimates that even if he closed the door of his business, he will incur what? 25,000 as expenses per year. At what level of sales would he be better off by locking his business up? Basically, temporarily shutting it down. It is temporarily shutting it down. Now, right, shutdown point is equal to fixed cost during operation. Please write fixed cost during operation. Fixed cost during operation minus fixed cost during shutdown minus additional fixed cost to resume operation divide by PVR or contribution per unit. Fixed cost during operation minus fixed cost during shutdown minus additional fixed cost to resume. What is additional fixed cost is when you shut it down and restart again you incur something. You incur something. The gap is called the avoidable fixed cost. The gap is called. What is the normal fixed cost here during operation? 80,000, and during shutdown you will incur 25,000. He would incur 25,000 as expenses per year. He would incur 25,000 as expenses per year. PVR was, I think, 40%. If your sales go below 137,500, please temporarily close down the operation. Temporarily close down the operations. Clear? With this, I'm kind of done with maybe 60% of marginal costing. Tomorrow, initially, I'll try to close the marginal costing part, and then we'll see. Maybe I'll do cost sheet. So if you get time, revise cost sheet. Otherwise, anyway, during the class, we'll cover it. So cost sheet, and if any other chapter, I have to take it up. So with this, I'm done with today's session. In case there are doubts, anything, I'm available now. Also, you can get your doubts clarified, or I think you can get my number and send me message. Also, I'll clarify over message as well. Thank you, friends.